Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey, what's happening? Hey, everybody. Nick's just passing the show on. That's great. I was going to talk about the prep for the median minutes for the FOMC that's coming up at 2 p.m. Eastern time. As Nick just mentioned, it is all quiet on the Western front. Let's take a look at, let me share my screen here. And Chandler, if you can bring that up for me, just give me a moment. Very quiet day overall. And let me float this out here. I'm looking at some gamma levels today on the SPY. Obviously, with things moving and shaking in Nowheresville today, we're looking for mostly tomorrow and Friday to be a directional day. Now, the trick is going to be NVIDIA earnings, good or bad, it's likely going to break this market loose. I actually took a trade this morning with my traders in my Flex trading room. I'm equities on demand trading room. We talked about it in Flex. We took the trade in EOD. I'm taking a little bit of a, it's kind of like a long strangle on the SPY. That's just an options play because I don't think that we're sitting at 530.83 today and we're going to stay there tomorrow. I think that NVIDIA, for better, for worse, up or down, big positive earnings or big terrible missing earnings, it's going to likely be the market mover. Now, this is the trade that I took. If you're interested, I can price it out and show you what it's trading for right now. Really, price hasn't moved much, and we actually have a little bit further in the day, so it might be a slight bit cheaper, but I doubt it. But what I did was I went out to Friday. This is the SPY, and let me see if I can just show you the trade here. So May 24th, this is the trade right here. And I'll just do it from scratch. So let me go into this position. Let's go build it from scratch. So NVIDIA earnings coming out today after market, which means Thursday, Friday will be my opportunity to manage this trade. So if I go out to Friday, here would be my trade. So if I bought the 532 call and I buy the 530 put against that, here are my thoughts. NVIDIA is top 5 in the world. Market cap, it's $2.37 trillion. If we look back just a couple of weeks ago, you know, Apple had an earnings report that moved the entire market about 1.4%. Here's Apple right here. The move on Apple from a close to a gap open the next day, we actually gapped all the way up here. We had a 7.73% move on Apple. Now, what did that translate to in the broader markets? The ETF or the SPY. Apple is number one at, what's the market cap here? Let me go back to Apple. I think we're at 2.6 trillion on Apple. 2.93. I was way off. 2.93 trillion. And here is NVIDIA. Okay. NVIDIA sitting at 2.37 trillion. Now, if I go back to SPY and we review what this did with Apple's earnings or post earnings, this was a close. Let me go to this candle here. This was a close at 505.03. Okay. So let's bring up the calculator here. 505.03 was the close. And the next day we opened, and that's what's important to me is just what's the open, okay? We opened at 511.16, okay? So minus 511.16 gives us a $6.13 move. At the time of the close, that was 505.03, which means the market all by itself, this broad market, S&P representing 500 companies, one single company with earnings move this entire index by 1.2%. Now, if we do something similar with NVIDIA, which is likely going to have a bit more volatility, or at least, you know, as expected volatility, we're trading here at 530. Okay. So if I have a 1.2% move, a 1.2% move, 0.012, that's 1.2% at the current stock price of 530.60, that would potentially, again, this, I don't know if this is going to happen or not. This would potentially move the SPY $6.36 within the next couple of days. So my thought is we either go up towards 536 or we go down towards 524. Now, if I can get that move, I turn my position profitable, okay? And the trade that I took is right here. 530 by 532. If I want to straddle this or strangle this a little bit differently, now it's going to be trading for 410. But again, I can make this a little bit cheaper. I think I can take this trade here. If I went out to, let's go $10 wide, $10 wide, that's going to cost me $4.08. That's the most I can lose on the trade. I think the reality is I can get a $5 or $6 move. I'm going to go ahead and take this trade in this account right here. So let me go take the trade here. So it's going to cost me 408, 409. I'll set it out there for 409, see if the trade fills. 410, I might have to go up 1 more cent. Not filling at 410. Let's try 411. Come on, bro. Hang on a second. Let me clear this up. I'm going to cancel this trade. And I think I'm going to tighten this up just a smidge. So we're trading at 530.06, which just in the last couple of minutes, we're just seeing the candle drop from 530.80 down over $1. It is 137. So unless this is a reaction that I'm not catching the news, this FOMC minutes was supposed to be 2 p.m. So let me go to the calendar. Yeah, meeting's still at 2 p.m. We just have some quick movement here. I'll just show you what I'm looking at, some real tick data. So in the last few minutes, we just dropped about 70 to 80 cents on the SPY. Now, directionally, does this change anything? Not really. In fact, if I look at my prices now, we're at 530. If I did a 529, okay, a 529 by 531, I can pay 396. If I sell that, let me go. Let's go $8. 531 to 539 for Friday. So I'll sell the 539. And from 29 to 20, I'll sell that. This trades for 360. I need to see if I can get like a $4.50 to $5 move. I would like to see it, NVIDIA possibly influence the market by at least 1%, which is close to $5 and change. I'm going to go ahead and take this trade right now. Okay. So let's see if I can get this finally filled. 363, 365. Come on, give me some liquid fills. 365. Guys filled at 364. Okay. So the way the trade works is this. I have a 531 by 529. So I'll just type this out on the screen. Let's go this. So I do a 532 long call. Against that, I'm selling the 539 sell call. And then I did the, was it 532 or is it 5? I think I did 531, sorry. 531 and 529, yep, okay. So I'll type this on the chart instead. So I did a 531 long call, a 529 long put. And against that, I'm selling $8 apart to make it a spread. So this is a 539 sell call and a 520 sell put. So I got filled for 364 debit. Anticipated move would be $5 to $6 post NVDA earnings. Okay. Now, why is this important? Yes, we have median minutes coming up in 20 minutes. But why is this important? Because this is what the market's really going to move on. I mean, the minutes today, maybe it's a precursor to what the Fed's really going to talk about with the rate decision coming in June, which is June 12th. If we go to the Fed Watch tool, we refresh this. Not much has changed from the market expectations. We are still expecting a pause for June 12th. We're still expecting a pause through July 31st, and then possibly that first rate cut, higher probability. We're starting to see that the pause is still creeping up there. There might be, maybe it's closer to like 45. And I mean, this is interesting. That September, this is a bit new, that we have a 11% probability that we have a 50 basis points cut in September. I don't know about that. That'd be a pretty dramatic cut if that's the case. I think, again, stick to the higher probabilities. This tool tends to be spot on, especially going into, the last couple of days prior to the Fed meeting. So anyway, rate cut is still expected in September for right now, but pause through the summer. November continues to pause. December, we're looking at the same thing. Like maybe it's a pause after one rate cut. Maybe it's another rate cut. We'll see. So market's still kind of back and forth between one rate cut in September, possibly two for the rest of the year. Okay. All right. So that doesn't really change. So FOMC minutes stay at 2 p.m. I'm sure we can review everything, but the reality is I think the bigger mover, the bigger catalyst is going to be what NVIDIA does today. So NVIDIA is trading at $943. And I'll go ahead and show you how I price this out. So a couple ways I do this. I have, some broker tools that help me out, and I have some third-party tools that help me out. So if I go to NVIDIA, you can see here that the implied volatility rank is 57.2. If I go out to this Friday's expiration, you're looking at a move expected to be about a $74 move. Now, to me, that's a little bit conservative because I've got a third-party piece that I use here that you possibly see me price this out before when Frank's been on the show. And, we look at some option trades, look at some earnings plays. And so I'll show you what that looks like right here. So here's NVIDIA. And over the last 92 earnings reports, the average move is around 14%. Okay. Now, I understand that NVIDIA has not always been this big behemoth. It's been, performing extremely well for the last 10, 15, 20 years. In fact, it is one of the best performing stocks ever over the last 20 years. In fact, it might be number one on a lot of those ranks. But my point is, even going back to 2023 into 2022, you can see that we had a lot of single-digit earnings reports. So this is after earnings. What is the market doing with NVIDIA? You get a 7.5, 7.5, 8.75, 7.9, 5.5, 7%. Those aren't huge moves, right? Now, granted, we're at $944. So even a 7% move in NVIDIA, this is probably going to be roughly what my broker calculates. So if we did a 7% move at a $944 stock, there's your $66 move. So we're probably looking at about a 7.5% move times 944. That's about $71, which is pretty much spot on with what I show here in my broker account with Tasty Trade. Now, what I'm looking at is not just these 10, but also previous history and previous earnings events. We've got 14%. Now, I think reality, I'm gonna shave that down a little bit. Instead of going 14.23, I see a 12.73. I see a 13.35. I see a 13.89. I calculated my NVIDIA play with a 13% move at a $944 stock. So I'm looking for about a $122 move from now until next week, probably next Friday. Now, for the sake of a big knee-jerk reaction, one way or the other, I'm pricing this out about $100 in my trade. So if this is, over everybody's head, just bear with me. This will make some sense. But what I'm doing is I am anticipating that between a $75 move and a $100 move is a pretty safe play in NVIDIA. Okay. So that means from current price, let's say that we just go up $100. Well, we're trading at 945. So that means to the upside, we're going up to 1045, or to the downside, we're going down to 845. So what I did was I did very deep in the money credit spreads, and you can see that it's very little risk. So if I go up to 1045, this would be 1045 right here, and I do a bull put spread. On a $5 spread, I can collect. Now, I don't think I'm going to get filled for this. This is coming up in the next couple of hours. I don't think this credit's going to get filled all the way. But I was able to take about 75 to 80% of the credit that was offered up by this trade, which means there's still risk on the trade. I collected $7.85 out of a max $10 risk, which means if I win this trade, I can make $7.85 in total. Okay. But I'm going to lose on one side of the trade because I'm hedged. I'm going both sides of this trade. So the reality is, I'll just keep this really simple, right? So if I do max risk, so I have credit at $7.85. $7.85. My risk is going to be, it's a $10 wide spread. So I'm going risk is going to be $2.15. Now, if I win one and I lose one, what I'm going to do is on the losing side, I'm going to lose my $2.15 and I'll cut that in half. Okay. So I'm really realistically losing about, $1 to $1.25 on one trade. Okay. So 215 is my max risk if I lose on both of them, which probability wise, that's unlikely. But if I lose $1.25 in one trade, and then I keep, let's say $3 to $4 on one trade. So this is going to be my winner. This is going to be my loser. What's my net profit? Net profit realistically would be about a $2.50 net profit. Okay. So for me, with this trade, if we go into earnings, we have this huge reaction one way or the other. If NVIDIA is well over 1050 or it's well below 850, one of these two trades should be a winner coming into tomorrow's trading, and I can probably take that 785 credit. So this is going to be my my plan would be a 7.85 credit if it's trading for a 6.85 debit or less. I'm going to protect profit, which means I can keep $100 profit. Okay. Now, if obviously it's better than that, if I go 785 credit, it's trading for 650, 625, 585 or less, then I can keep that net profit as well. So for me, for trading a stock that's almost $1,000, my max risk is only $2.15. So not a lot of situations can you trade something that expensive and that volatile and have such a small risk. But that's the beautiful thing about trading options. All right. So that's a little plan on NVIDIA. And I do think that NVIDIA is going to be big enough to move the entire market. And therefore, I'm planning on, let's see if the SPY over the next couple of days can make a 1% move, because we've had very little direction. Check this out for the week. The daily candle today is still mixed. The weekly candle thus far has had very little movement. We're sitting here with a high of 531.56 and a low of 529. We've only had a $2.50 move for the entire week. And we're averaging, on a weekly basis, we're averaging about $11 to $12 in movement, which means somewhere, some way, by the end of this week, if this is going to hit just an average move, we should see another, $9, $10 of movement to get us a full weekly candle, right? So I don't know what direction that is. I said last week, and Nick and I talked about this last week as well as Monday, I do see a lot of divergence on these higher timeframes, okay, which means that price made higher highs and momentum has disagreed with that. We're also sitting at overbought conditions on relative strength. This is on a weekly time frame. I pay attention to this stuff, okay? Look at this. I just want to show you this indicator. This is one I've used for almost my entire trading career. This indicator right here at the top that just connects the highs, this indicator right here connects the highs. All it means is inside of that, the guts of that indicator tell me, am I overbought or oversold? If we're up here, it's overbought. If we're down here, it's oversold. We're up here, it's overbought, and we have divergence where price disagrees. Okay, so if we go back here on a weekly time frame, how many times have we seen this show up in my chart? Right now, this is the SPY. This goes back. I mean, we have lows here in 2008. I mean, just like that, I compress the chart. You can see that this doesn't happen very often. Let's go back to 2008, which is 16 years ago. Happened once. Did we have a bottom? Yes. Happened twice. We had a top. Happened 3 times. We had a top. Happened 4 times. We had a top. It didn't happen here on the weekly time frame, but it was close. It didn't happen. It happened on the daily time frame. But we had 1, 2, 3, 4. We are 4 for 4 for calling a top or a bottom on this market with this indicator. Okay, that's why I like it. How about over here? Going into 2021 to 2022 stretch, did we have a corrective move? We see it here. We're 5 for 5. That was a big correction in 2022. Okay, now you see that it's happening all over again. I pay attention to this indicator because it tends to work. Now, I know that the market might blow the top off and go a little bit higher, just like it did here. First time it connected, we had a little correction, and then it connected again, had a bigger correction. So I'm not saying this is going to be the top, okay? But I wouldn't be surprised if the market does something like this. If we blow the highs off on NVIDIA, I wouldn't be surprised if the market quickly comes back and fades that move and fills a gap and starts to correct a little bit more, okay? And if that's not the case and we start to drop immediately on NVIDIA, then we're looking at more of a broadening pattern right here, and probably a corrective move where I would be happy to buy some dips and buy some pullbacks to see if we get us trade some volatility in the next maybe, a couple of months. And Sammy, who said horrible charts. You got to understand, I see these charts every single day. I don't see the stuff on the charts. I see price action. I look at these charts every day. I can filter through noise. If you want a clean chart, I'll happily start from scratch. But obviously I keep notes and I, keep my trades on here. So, bear with me.
Hey, okay? Chris.
Hey, what's up, dude?
Hey, sorry to bail on you earlier. I didn't mean to. I figured you'd just take over the show for a little bit. Obviously, you've done this for like a year or two, so you're good on your own, Chris.
Oh no, it's fine. I was just thinking we'd have a little convo. I felt like it was like Ricky Bobby, just like, here we go.
Like, you got the show now.
Yeah.
No, so, Chris. Thanks for the coverage. I was listening there for a few minutes just while you went. I can't overestimate. I've said this so many times today. It's all about NVIDIA earnings. I mean, meeting minutes are going to be, potentially, it's almost like a yellow folder. It's almost like an orange folder. Like it might do something, but most likely it won't do anything. And default, the market's just going to be watching straight up NVIDIA.
Yep.
Saw a little, 0.25% down now on the day. If you're taking a look at the SPX, just a slight sell here. If you take a look at specifically the semiconductors, are still up in the green here today, trading ahead of NVIDIA, but seeing a little bit of a pullback here. Chris, if NVIDIA earnings come out good, and I want to say also, I was mentioning this to James off camera, that everybody expects NVIDIA earnings to be good. In fact, if you are saying NVIDIA earnings are going to be good, you are stating the consensus. That is what is expected. You're going to have great earnings. They usually beat earnings. But Chris, what do you have to see from NVIDIA to seriously propel us like we saw back in February, where, back in February, here's the February 22nd. I did a little research on this earlier. February 22nd, the NASDAQ, pumped another 5% over the next 30 days off of the back of, NVIDIA earnings. And, this was in the face of inflation concerns. So it was like so powerful that it just kept moving anyways. What do you need to see from NVIDIA to get a repeat rally or a reversal?
Yeah. So I'm looking at the last, let's go back to, Q4 of last year, and we can go back further, but even the last couple of earnings prints, I mean, we had a 20% surprise to the upside on EPS. We had a 12% surprise on revenue. You go back to Q4 to Q1 earnings. This was the big surprise. Again, 12.34% surprise on EPS and an 8.37 surprise on revenue. Now, here's what's going to be interesting. Look at the numbers. So we reported, it's NVIDIA. So NVIDIA reported 5.16 EPS and 20.39 billion, I'm sorry, 22.1 billion in revenue. Now, take a note of that. Okay. Reported 5.16, reported 22.1. Look at the expected this time. Higher at 560 and higher at 24.5. They're expecting to show almost another $2.3 billion in revenue, and they're raising EPS estimates by another 35 cents or so. So for NVIDIA to I think, in my opinion, to blow this thing off and especially make more room to the upside, we probably have to have an earnings estimate EPS wise probably closer to $6, and revenue probably has to come in at like 25.5 or better. If it comes in right around expectations, I think this market fades quickly just for overbought conditions, just for a little correction. The one thing that is interesting, though, is last week, you and I talked about this, I think, on Friday, but broader market has been up. 70% of the stock market at 7,000 plus companies, almost 70% are sitting up above the 50 moving average and up above the 200 moving average. So we are back into a bit of a broad market rally, which I say that, but that's what also, that's what galvanized the move up towards all-time highs again. So there might not be enough momentum and steam to really blow this top off. But like I think we talked about this yesterday, if NVIDIA blows out earnings and all of a sudden we gap up to $1,000+, I'm just a little skeptical that there's any room to run from there. I think that it could gap up to 1,000, and then this goes just like it did here. We had this huge move up, and we have a huge candle the next day or the next week, and NVIDIA just gives some of it back, and then NVIDIA is going to sit like this sideways. And we had this crazy run, and then we just have the technicals that maybe just take a breather for the summer. Maybe it's a range summer instead of just more melt up. But I don't know. I mean, obviously I don't know, but I like, if you saw my trade earlier, I'm planning on NVIDIA to be a catalyst to move the SPY at least 1%. And so I'm taking a trade on that in the SPY. If we get a $5 or $6 move, I'm going to make probably a 30 to 50% take profit on my SPY trade that I just took today. Very
cool. So Chris, I want to show you these two charts. Just based on what you were just talking to us, I just wanted to add a visual to your point about market broadening, the breadth story. How much is this market just technology or not? If you take a look at the last 1 month, you're going to see technology it just lights up green, right? Technology in the last month, but let's take it back where we were 1 month ago. April was a down month for the S&P. It was down month for the NASDAQ. You saw tech get absolutely smoked in April. I mean, not actually, in all actuality, it's still up tremendously, but they saw a cool off month. So yeah, tech is the most green if you look at 1 month. But to your point about broadening, check this out in the 6 month. Pretty green everywhere, right? Not just tech. And so, I think the reason I bring that up is that NVIDIA is super important to the market, but we are seeing beyond just NVIDIA a broadening kind of theme. I think that if you do see Nvidia gap up and fade at all, I don't know. I'm trying to gauge how much it means like the rest of the market is just toast, or if it's really strong. What do you think?
That's a good point, because I think that for Nvidia, the isolated incident would be Nvidia today after market moves the SPY, maybe 1.5% by Friday, give or take. But looking at the same chart you are, that 6-month performance, I went year to date as well. I mean, we have had broad market rally, broad market bull market since Q4 of last year, certainly Q1 of this year. And then it did start to get a little bit higher concentration back into some of the Mag 7 stocks. Tesla was booted out of the Mag 7. Then Apple made a big comeback from 160. We're trading back up to 190. I mean, Apple, 6 months, it's flat, but it was down, 20+% or close to 20%. So Apple's made an incredible comeback, but you can see a lot of green and energy. And I think we talked about this on Monday, utilities coming back in a big way. Energy still steady and actually leading sector-wise this year. It's like energy, utilities, and financials are keeping right up there with communication services, or keeping right up there with technology. And that's usually not the correlation that we see. We've been in this US tech-based rally for at least the last 10 plus years. And I think now the broader market is starting to participate. This is a good thing. This is the Goldilocks scenario. The melt up can continue. Look, I don't want to be fighting this market. So NVIDIA, you're right. Like NVIDIA, if they miss in a big way, I could see a knee-jerk reaction to the downside, maybe 1 to 2% to the downside. But as we saw this whole year, outside of April's correction, we saw the market buy dips at 1.5 to 2% all year, except for that slide we had in April, which only was a 5 to 6% correction, which is very contained. And that's quite a healthy, bull market to still pick up and make all-time highs after a 5 to 6% correction.
Yep, I'm with you. And Chris, we are about 2 minutes out from any potential volatility that could come from the meeting minutes. I'm trying to understand how to read this. I've never really used Financial Juice, but I'm checking out Financial Juice to try and keep an eye on anything that comes out from the meeting minutes, any notes that are worth here. Chris, the meeting minutes here today, to that point about the broadening, what's kind of interesting is the broadening rally is a lot of it is contingent on rate cuts because the earnings that are here and there right now are, tech, like NVIDIA, like Google's, Microsoft, et cetera. But if you're going to get rallies beyond it, it's all about the rate cuts. So the question is, are we going to get borrowing costs reduced? And we get a little bit of a snippet of what the Fed is feeling here in just about 1 minute. So, I just want to reiterate to everybody who's watching, you probably won't see a spike on the volatility. We got just about 2,000 people watching with us here. I just want to say hello to everybody. And if you're not already following the A1 Trading YouTube channel or Twitter, wherever you're watching, make sure to follow. You can also find Chris Pulver if you have not. If you'd like it, if you've enjoyed his commentary, you can find Chris at Real Chris Pulver on Twitter, or you can subscribe to his YouTube channel. We'll drop the link to that as well. Chris, again, we're just about 30 seconds out here from meeting minutes. Curious to see if we get anything moving. Also, gold and silver pulling back here today. We haven't even talked about gold and silver.
Nick, I want to let you know I did clear my position on silver. I was long SLV. I ended up taking. Let me do the math here. It was a pretty good trade. So 4.55 divided by $4. It was 113% gain on that call option. So I went ahead and took it. I'm looking to reposition. I've got cash secured puts that are leveled in. So I'll take an SLV assignment. I think it was 29, 28, 27. I'm happy to own it. I also want to give myself a little bit more time because medium to long term, I'm still bullish on silver. But if all I was trading was a call option, at this point, we're about, it's May, it's almost halfway through the year. If I get past like the half of the year or even 3/4 of the year, my call option is going to have less extrinsic value and it's only going to be intrinsic value. So all that means is if silver doesn't continue to go up, I'm going to lose power and lose juice on that trade. So because I was up a decent amount, now I'm going to start positioning for ownership of silver and trading some silver futures. And I'll be a little bit more creative on how I want to play my core position. But I still was happy with silver for profit. JD, so a Chinese retailer, took some profit on that one, turned like a $6 debit into a $14 credit. So I've had some good ones where, some decent contract sizes and making some, 150, 120, 100% gains. So pretty good stuff. I'll take those any day.
Yeah, for sure. Well, congrats on that. I took profits on my gold trade. I actually entered another gold trade shortly after those. So
Okay.
I am back in the gold idea. I'm not playing any options on it personally. I'm just, long some GLD shares. We'll
Yep.
see if that can play out. Speaking of, market moves, we do see the S&P 500. It's moving a little bit here now that the meeting minutes are out. Chris, if you could try and pull something up here while I just kind of give a reaction. We
Yeah,
do
for
have
sure.
anything you find, let us know. So S&P is down 0.3%. NASDAQ, I mean, they haven't really moved. The Dow did take a little bit of a dip, bounced just slightly. Gold, again, kind of down on the day and sideways in the last few hours. Silver down here. Oil shooting lower here as we speak, actually. That's kind of interesting. Yields on the 20-year yield, we are flat on the day exactly. The 10-year yield is just mildly higher, and the 2-year yield is actually pushing up here on the 4-hour chart. Kind of interesting there. Bitcoin down 0.5%, Ethereum down 1.3%, despite the recent announcement that there's a possibility from the SEC that we do see Ethereum
ETFs.
ETFs make it to
Yep.
the stand as well. So
Yep.
interesting.
I've got some highlights here. So Financial Juice is an easy site to pull all this stuff together. Goldman Sachs CEO says, I see 0 rate cuts in 2024, just focusing on Fed minutes. Participants at the meeting assessed it would take longer than previously anticipated to gain greater confidence in inflation moving sustainably to 2%. So again, same thing we've heard from the Fed before. They keep talking about we want 2%, we want 2%. 3.4 is a long ways away from it. I mean, I don't think the market is moving and reacting like we're going to get to 2% soon. It's like, I think the market's more like, we're going to think about this, 6 months from now, maybe 15 months from now. Everyone's, what's funny, Nick, is nobody's talking about the recession anymore. Nobody's talking about inverted yield curve anymore. Everyone's talking about rate cuts right now. Like it's been bound to happen. It's like, yeah, we know the Fed wants to cut and at some point they will, but the Fed cannot afford to see inflation spike back up to 4%. They really can't. So this talk will continue to be the same. Begin discussions of appropriate longer run maturity composition, decision to begin to slow pace of decline. Future policy path would be dependent on incoming data. We know that. Uncertainty about the degree of policy restrictiveness. Willingness to tighten policy further should risks to outlook materialize to make such action appropriate. Like, it just sounds like minutes are pretty much in consensus with what we've heard from Powell the whole time. We'll raise rates if we have to. It's data dependent, right? Like, they're not giving the market the freedom to say we're cutting rates, even though the market already thinks it.
Yep. And S&P, NASDAQ, again, a little bit of
It's down a lot
tonality
today,
there.
right now. Yeah, I mean, we're down almost $3 on the day now for the SPY.
Yep. So SPY's down, NAS down just slightly. The Dow Jones has lost its 40,000 handle. So we're at least for now cooling off. I mean, Chris, to me, I'm going to say this. I'm bullish now. So now I'm going to find the bull case. But I do think that the inflation, story is valid. But I think at the end of the day, Powell seems just eager to cut. And yes, you do see some of his cohorts kind of also mentioning, inflation's not convincing just yet. But I think Powell's stance on it is kind of where I lean. At the same time, though, inflation is no joke. They're not dumb either. They know that if this is one print, and if you don't see some follow through on the CPIs to come, market's not going to like that. So we'll have to see. S&P down 0.4%, NASDAQ down just shy of 0.4. Gold here down 1.3% on the day. Took a bit of a dive on, I believe earlier in the day, we also had some Fed commentary that was a little bit more on the hawkish side. But again, if you're watching the indices today, just I would say stay focused. Don't lose sight of what matters here today. It is NVIDIA. Right. NVIDIA is, don't be blinded by meeting minutes. If you're watching, indices. For my index trading friends, it is all about that 4:00 close where we'll hear from the big guy, NVIDIA, whether or not that's going to continue to lead the charge for the AI trade, or if that's going to take a break for a little bit. And I guess we'll just have to see. Chris, I wanted to just give us your high level thoughts on the Russell. I have mine too, but so many people I've heard just talking head after talking head talk a lot about how the Russell is gonna just what's that guy, the not Dan Ives, there's the man, I can't think of his name. One of the super bullish dudes that goes on CNBC all the time. He's been just saying that the Russell's going to take out the all-time highs this year, and he's been saying it for some time. I'm curious, do you think the Russell has upside, or because I know you have a trade on it, so I'm curious what your thoughts are. Or you did. I don't know if you still do.
I do. So what I did is I rolled out. I had a debit spread on the Russell that had a break even around 210 level. So we got very close to that. I went ahead and just I bought myself some more time in the trade. Now my max risk on it is about $3. So by August, if we're not above 210, I'm going to lose about $3 a contract. But I also have out to January to see, can this actually be the rip and the rally and the catch-up trade that this particular guy you're talking about is probably mentioning? And look, here's what I'm doing. You said that the markets are anticipating rate cuts, or the market needs to see rate cuts, and this sustained rally needs to see rate cuts. The Russell's probably the poster child for needing to see rate cuts, because we're talking small cap, we're talking, high leverage, high borrowing, way more volatile versus the S&P versus the Mag 7. The beta on the IWM is much higher. The IVR, the IV rank right now in the IWM compared to the SPY, it might be changing a little bit right now. This is crazy. Earlier this morning, Nick, the SPY was at 5 point something IV rank. It's doubled in the last 10-15 minutes. So the IWM is trading at 17.5, which I look at that and it's like, that's not exciting. But the reality is there's always a little bit more volatility in IWM. So here's how I'm positioned for it. I'm always looking for asymmetry, right? I'm always looking for a good opportunity for more reward than risk. So how do I think I can get it this year in the Russell? Well, there's an all-time high that the Russell hasn't gained and hasn't reached, right? We hit the all-time high 20 plus times in the SPY, 20 plus times in the NASDAQ, probably 15 to 20 times in the Dow. If we're going to see the IWM catch up and actually be an all-time high run, look at you can measure this move and get a little bit excited about, if the small caps are going to take out this high, that's a rally of 17.6%. Who out there right now would love to see the SPY rally another 17.6%? Everybody would, right? So I just think there's a good opportunity to see a bullish case for the IWM, but it will very much be dependent on what the Fed outlook is and how aggressive they are with cutting rates, like they say they could, or like the market's anticipating. If they go and squash the hopes and dreams of this Fed cut September decision, IWM probably comes all the way back down to 189, possibly all the way back down to 170. And we could still be somewhat resilient on the other indexes. But man, I think the Russell's going to take it the hardest if all of a sudden they're like, oh, it's going to be another 12 to 24 months before the Fed cuts. So I think it makes it volatile, but I do like the trade. I just put one on today, actually. I'll show you what I have here. So IWM, I have a ratio spread in the IWM. And I have what else did I do? I think I just did the ratio spread. And then I have my diagonal spread. So that's out to January. Let me go IWM here. So I have a ratio spread. It's a 190. Nope, that's not it. Is that it? This one. So I did the ratio spread, the 193 and the 198. Is that the trade I took? Yeah. So really quickly on the ratio spread, if we drop in the IWM, this would give me an opportunity to make about $5.50 credit on that trade, and then actually take some shares of the IWM and repair it. So it's kind of a fancy way of trading the wheel strategy like you like to. You're willing to put the cash if you're put out there, take some shares, but with a ratio spread, I can actually have a long put that kind of juices that downside, so I can take more profit if it does, in fact, assign me. So rather than taking I get $1 credit if I hold it here for a naked put, I can actually get, closer to $5.50. So my cost basis is going to be like $187 on the IWM. And I'm happy to own the shares there if I have to.
Fair enough.
So anyway, so that's that. But I like the Russell. I wish there's a way to trade the IWM, but just trade the top 25 stocks. Because if you do IWX, that is the top 200. And you can see that this one has ripped to all-time highs. Yeah. So it's a concentration of the small caps, or what's performing best. It's the top,
growth
the top 10%
well for the Russell. I think what is it, IWF is the growth one too, and you've seen some expansion there. I also wanted to just show something while you're on the subject of the Russell and just broadly speaking what the market is looking for. I see a lot of people asking about gold and NASDAQ and things like that, guys. we're trying to cover as many markets as we can. So bear with us here. We've got 2,250 people hanging out with us. Shout out to everybody who's hanging out with us live. If you could take just half a second, thumbs up the stream, like the stream. If you're watching on Twitter, YouTube, wherever you're streaming from, thanks for being here. I wanted to just give an updated view here. Now that meeting minutes have been out for a few minutes, updated view on the CME watch tool here. Expectations for rate cuts. That's what it's all about. Whether you trade gold or currencies or indices, it's all about the rate cuts right now. And the question is when and how much. So right now, I've got it pulled up here. We're looking at, this is the June meeting. June meeting, pretty much 96% chance right now that we're not going to see a rate cut. We're going to remain unchanged at 525 to 550. Then things start to get interesting, at least worth mentioning that the possibility is set at about 19% that you could get your first rate cut in July. That's pretty aggressive. But again, Chris just mentioned, he pointed out in the meeting minutes that there are still some hawkish members of the Fed who don't think rate cuts are going to happen this year. So this is why probabilities are just probabilities, right? They are speculations. It's very much what the data comes out to be. It depends on what the Fed decides to do. We really get interesting once we get into September. Right now, expectations are for our first rate cut to occur in September of this year. 50.9% chance that we see a rate cut by that point, and only a 38% chance that you don't see a rate cut by September. That's with the current data. What if we get a hot jobs data? Oh, well, that changes the picture. What if we get inflation that ticks up again? Changes the story. But as we have it now, expectations are for our first rate cut in September, with the possibility, the disputed and hotly debated idea of a second rate cut. Right now, it seems like one is like the middle ground. Some people say none. Some people say two. And how does that impact the markets? Now, again, one area that we could keep a quick look at or keep a quick eye on is the dollar index itself. The dollar index will trade higher if expectations for rate cuts are diminished, and it will trade lower if expectations for rate cuts are increased. So recently we've seen a round of economic data. You know, Chris, we've gone through this a lot of different times, but we've had jobs data that's been coming out light. You know, we had an NFP miss. Unemployment claims has been rising. Job openings in the US have deteriorated. If you take a look at unemployment rate has ticked higher over time. Wage growth has diminished a little bit. You know, the inflation story has, at least in the recent round of data, shown some signs of normalizing. The blue, by the way, guys, is the US dollar. So, you know, you're seeing some progress on that front. You take a look at economic data. I know I'm flipping through a lot of charts, but this is the whole picture to when rate cuts. If you really want to understand the story, you got to understand, you know, the data that's leading the Fed to make their decision. So you have GDP growth came in lighter than expected. At the same time, you take a look at PMI data. PMI data has been light. Retail sales data has come in lighter than expected as of last week's CPI day. Wednesday, we also got retail sales. A lot of people overlooked that. The consumer showing some signs of cooling off. My point with showing you all of that is that, you know, if you're asking when are rate cuts coming, you got to keep an eye on the economic data, because that's what the Fed themselves are choosing to use to kind of make their decision as to when that rate cut will be. And how will rate cuts impact the market? Remember, rate cuts would be dollar bearish. Rate hikes or holding rates higher would be dollar bullish. Take that where you want. You could go look at stocks and you could say, well, if a strong dollar is present because rate cuts aren't coming, stocks are probably going to struggle. Right now, at least with some hawkishness coming into the meeting minutes today, stock market's just down mildly, just not even 0.5%. I mean, it really, I think what the big mover today is going to be NVIDIA after the bell. We will be streaming until that event. Also, if you enjoyed checking out all of that market data here, we are giving away a copy of our software, the A1 Edge Finder, which is, again, what we use to analyze all this market data. If you'd like a copy of the Edge Finder, we're doing a giveaway right now. It is free to join. Click this link. We're dropping a link here in the chat for you right now. If you click this link, you can put your name into the giveaway there. Click that link. Oh, we'll try it again. Make sure that link works okay. So just uncombine the text. But yeah, check it out. Keep an eye on it. Nas getting a bullish reading on the indices here. That's kind of interesting. Anyways, Chris, again, does that summarize the whole picture here? I mean, data, if you want rate cuts, you want to see data cool, but next topic for you, and this is where we've come back to this a few times.
Mhm.
How much is too much cooling when it comes to economic data? And does that make you worried at all? Like now that you're seeing, I just walked you through all this data here that's showing signs of moving in the negative direction. Does
Yeah.
that make you nervous at all for maybe a correction in the or a pullback in the indices at some point?
I think there's a fine line between not talking about the recession and all of a
Yeah,
sudden having it be data is right in our face showing us that, oh my gosh, we might be in a recession.
right.
And pulling up on the Edge Finder, I mean, I'm always going to be watching a couple of things. If I see residential construction, unemployment claims or residential construction slow down over a 12-month window, if we see like an 8 to 10% pullback or change in residential construction numbers as far as jobs, that has been undefeated with calling recessions. We also have the inverted yield curve, which typically takes 15 to 24 months. We're in that same window with inverted yield curve. The recession is still out there somewhere, and just nobody wants to talk about it. The other
Yep.
thing here at the Edge Finder is I just went back a couple of years. We had our lowest point around 3.45. That would have been January of 2023. So last January, we're at 3.45. Now, in a rolling kind of 12-month window, if you see the unemployment rate go up over 1%, that's a big sign that nobody's really paying attention to. So this perfect, softening labor market, this cooling labor market, if we get over 4.4% unemployment, 4.5% unemployment, that's not a good sign. And I just think that that's like the next potential reality of, oh my gosh, we've had job losses like crazy, and tech has been cutting, and all these AI has changed the margin for all these companies. But the reality is people are losing jobs, and that right there will cut what's of our GDP, Nick? Consumption, right? So if we have people losing jobs, we're not spending money, and that's going to be the biggest consumer driver for the markets going down, because all of a sudden people are finally scaling back because they've been overstretched for the last couple of years.
And that's
so unemployment I'm watching.
I think right now the going is good when it comes to stocks. I mean, people are cheering the idea of rate cuts. And for me as a trader, that's the trade right now. The trade is, rate cuts on the way, and that's the story. But where I think you have to kind of be a step ahead of the market is don't, take your thumb off the pulse of this economic data, because if this continues to trend towards, growth is really starting to hurt, the other side of the, it's like one side of the engine's working great, and then you have a blowout on the other side, then something's wrong, right? If you lose the earnings story because the economy itself is starting to slow, that could be your next battleground for the bears. And again, right now, the reason I always look for the bear case, even though I'm not necessarily bearish or shorting the markets, the reason I always look for it is because you have to be prepared for what that case is going to be. If the next thing is, look, unemployment was trickling lower at first, now it's starting to waterfall lower, jobs data starts to come out real poor, or, that's going to directly challenge the idea of earnings for companies. And by the way, how does that impact gold? It's kind of the opposite effect. If you do get economic data continuing to cool down, I think that's why gold and silver too, might offer you that kind of alternative where you're seeing a down day today. So it's not a perfect example, but the market's been trending up on par with the recent cool down in the economic data. Inflation, cooling is one side of it, but at the same time, jobs data showing some weakness. Market likes it for gold. Maybe not so right now. The stock market also likes it, but how much do they really like? How much economic slowdown do they really want to see, right? Bad news is good news right now in the market. I know that's confusing, but bad news means, inflation comes down, rate cuts. But how much is bad news until it becomes actually just not good news, right? That's the question.
And also, we have to remember that if you look at the sector performance this year, we're right on the cusp of these non-traditional sectors leading the markets. So your utilities, your energy, your financials, and therefore we could still have this odd pivot where maybe growth slows, right? But maybe the energy sector is okay and stable. Maybe the utility sector is what picks up the steam. Maybe financials pick up the steam for whatever reason. Even if the rates are getting cut or anticipated cuts, I mean, I haven't heard a peep out of anything related to Silicon Valley, anything related to, our bank failures. And I mean, look, you can still go out and get a money market instrument for 5.3, 5.4% right now if you want to park your cash for 12 months risk-free. That's not a bad position to be in if you don't want to take the risk of what the stock market might offer volatility wise. But what I'm saying is sector rotation could be a real big play this year, where maybe out of the semiconductors because of the blow off move that they had and into something a little bit more like you see, if you see on my chart here, the energy sector, utility sector, going back into the Dow or the blue chips for less volatility, getting into some dividend stocks. I mean, there's a lot of stocks out there right now that pay 4 to 6%. I mean, one of my better performing stocks right now, like movement wise and dividend wise, is Altria or MO is the ticker. I mean, I'm up like close to $30,000 on that position. And it's also yielding like a 9% dividend. So Pfizer's finally taken off for the first time after getting beat down to, the pulp at $25, $26. Now it's up to 29 and change, almost $30. So there's some good dividend stocks that offer some really good price levels and maybe have $3, $4, $5 of upside, which might be 10 to 15%, which might not seem like a lot. But if I can take a stock and flip it for $5 a share, that's a lot of money for me. If I can flip a stock for $5 to $10 a share, that's a lot of money for me. I don't need the NVIDIAs to go from $1,000 to $2,000 to be happy. If Amazon goes from 185 to 215, I'm stoked. That's $25, $30 a share for me. But if Pfizer goes from 25 to 30, I make a lot of money, because it's also way less volatile and I'm willing to kind of position accordingly. So again, we sit here, we kind of throw out all these data points. At the end of the day, you watch your charts, you watch your price. Nick, I was at a conference this weekend with Tasty Trade in Seattle. One thing that was a great takeaway was being product indifferent and being strategy diversified. Mm-hmm. That's one way to survive this market, whatever we do. And so to have some bond exposure, to have some gold exposure, some silver exposure, some Bitcoin exposure, to trade different sectors, to trade currencies and trade equities and ETFs, all of that makes up a good portfolio. And that's really important to take away versus, hey, just not to bring it up, but GameStop, right? Everyone got excited for once in 2 years for GameStop because it finally did something. And then what did it do? It gave it all back. Yep. So, it's just, that's not how trading is. If you want to survive and do this for the next 5 years, it's not about today, right? It's like you survive and you watch your butt, you buckle up and you wear your hard hat and you trade non-correlated assets and you just trade and grind and have a number of occurrences that make you money. So that's right. That's how you get the job done.
That's the thing, Chris, you talked about it, just having a diversification of strategies helps to smoothen your performance. You know what else it does? It also helps you stay sane during when your strategy is performing poorly. I'll give you a quick example. In 2022, my portfolio, my main portfolio that I show all the time on my streams and videos, I was very bullish on on equities during that time and just had a terrible year in that account. Mm-hmm. Now my saving grace that year, what kept me, kept me occupied with my brain. I still had a losing year, but what kept me occupied was that my FX account did really well that year. I was so bullish on the dollar that year, and it was like cutting butter to be long the dollar in 2022. It was just the whole thing just trended up the whole year long. And so I made some money, and more importantly, I think I didn't bail on strategy one completely. I just kept doing strategy one over here, and strategy two, I just spent more of my time looking and talking about it because it kept me busy. It kept me preoccupied, kept my head down from bailing. I think one of the worst things you could do is just because something's performing poorly, you just cut the whole thing. You say, I'm done with this. Cause sometimes that's like the worst time to do that is every strategy, every market, everything in the financial markets has drawbacks, drawdowns, times that just suck, because if it didn't, everybody would be doing this and making a ton of money doing it. Everything has downsides and pain points. On that exact point, I saw this from this guy on Twitter. He's great with data. Charlie Bolello. He showed that there were $325 billion of outflows in the S&P 500 in 2022. So I just want to put this in perspective. If you just bailed in 2022 to the tune of $360 billion, let's just take a percent of that and say, okay, we bailed at, and this is where investors typically fail, right? The herd bails at the bottoms and refuses to buy at the tops. Or I'm sorry, they bail at the bottom and they just buy in at the tops. But they bail. So to the tune of 355 and change, this is already up 50%. You take $350 billion, which would now be worth $550 billion if you just
stayed in and participated. But they bail, and then where's that money getting back in? You bail here, and then now the money's getting in here. And you miss out on actually the courageous run is if you can just stay in the market and control your risk and control your drawdowns. I mean, look, there's a little bit of market timing that goes a long way, but as we've said, and as everyone should know, this adage in the market is time in the market is way better than timing the market. But I will say this, when I took over the show here for just the last little bit, there are levels that I certainly see I can time the market within a certain degree. Give me a week, give me a month. I can pretty much have a top or bottom realized, but it might not be perfect and it might not be spot on. But that alone, I can protect my profits when we have this crazy blow off move. And I can certainly be more courageous and buy in when the market is so fearful that everything's on sale. So if you really want to make a lot of money longer term, a little bit of timing will add some extra alpha to your portfolio, but you got to have the cash and you have to have the courage and the buying power to get in when the market's showing red.
Exactly
so
right.
That's all. I mean, that's where we're at right now. And I'm curious how tomorrow plays out with NVIDIA. I'm curious how today plays out. We're already down, $3 and change from the tops today. I had a gamma level that I'm watching at 525. If we hit that today, that SPY trade I took earlier is going to be closed out for profit prior to NVIDIA even hitting the market. So if we fall another, $3 today, I'm closing that trade out for probably a 30 to 40% win. And I'll see what NVIDIA does in an earnings play. So but otherwise, I'll just sit through and talk about it later.
We've got we've got our next guest coming on here in just a few minutes, but I wanted to mention this. We are going to be going all the way up to NVIDIA. If you're around this afternoon, no pressure at all. But if you'd like to come back, if you'd like to tune in, you're more than welcome to. If you're busy, all good too. We'll be streaming all the way up to the bell. Just let us know, and you're welcome to tune in if you like.
Sounds good. All right, thanks for having me. That was great.
Okay, thanks. See you, Chris. Yeah, guys, again, we are planning to do the show all the way until the NVIDIA earnings here. Today, we've been going since, 11 a.m. or so. So we have been streaming for a while. Let me just make a quick plug here. If you're new to the show, we've got a lot of new faces here. Over 2,000 people watching the live stream at the time of us streaming here. Hello. Thank you for being here. Appreciate you hanging out with us and all the different guests that have rotated in on the A1 Trading Show today. Let me also just mention, we showed off some cool data points and tools here. We're giving away a free copy. If you have not entered the giveaway, it is 100% free to join. We're going to drop the link to that here in the chat. Fill out this form. Again, you can enter your name for a chance to win a copy of our market trading software. Here at A1 Trading, we build tools for traders, and we also, of course, offer free live streams to help traders keep up to date with the latest market moves, ideas, and we bring on talent from all over the planet to kind of weigh in on what's going on in the markets. Guys, up next, we've got a brand new guest. Well, I think he's been on the show one time in the past. We're bringing in Forex James from Elite Traders. He's a long-term friend of the channel, and he's going to be going through some markets with us as we count down to NVIDIA earnings. Markets are moving. We'll be right back after this quick break with Forex James. Check it out.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
All right, guys, and we are back on the show hanging out with, again, a guest that has not been on. I believe, James, we've had you on one time in the past. How's it going, James? Welcome back to the show.
Hey, Nick. Yeah, good. Thank you. Thanks for having me. Yeah, I've been on the show once before.
It's been a minute. It's good to have you back. And again, James, you're with Elite Traders, right? So Elite Traders, some of you guys might be familiar with them on social media. You guys have your own solid following. So it's awesome to have you on the show. And I'm curious to see what you've got in terms of ideas here for us today.
Sure.
What are your thoughts? And I think you trade a good mix of things, but you trade currencies, you trade gold, right? What are you watching here today?
Everything really. Anything that can make money, I will trade it. The only thing that I actually stay away from is stocks, really, just because I put a lot of research into the commodities, the indices, and the currencies, and to trade stocks as well, just adds on more time that I just don't have.
Sure.
So that's the only thing really that I cut out. But if there's anything, if there's anything major going on that I do spot, I'll look into it. But it's not something, I'll look at on a day-to-day basis.
Now, when you say stocks, do you mean individual stocks or do you mean the indices as well?
Yeah, just individual stocks.
Gotcha. Okay, so you'll trade the indices every once in a while and watch those as well. Cool.
Yeah, that's correct.
Yeah. So James, today we've had again a combination of meeting minutes. We've got Nvidia around the corner. Markets are moving. You've got gold pulled up. Do you have any? I think I saw you were also on the gold train a little bit. I got stopped out or trailed out of my positions on gold. Are you in any gold trades or watching it yourself?
Yeah, I'm stuck in these 4 positions at the minute. So we had an initial entry here. So we scaled it. We scaled in 4 times. So we had an initial entry, and it was basically the same reason as you. But because all your viewers are here, I won't go into it too much. I'm sure they've seen your videos. The criteria is exactly the same. I use the Edge Finder as well.
Yeah.
So it's, I won't bore you all with the same reasoning, repeating what Nick said. So from a technical aspect, I can cover the entry criteria from there because it's slightly different to yours. So it's very simple. It was just a case of we saw a range in gold on the higher time frame. So sort of, 4 hours down to the 1 hour, we didn't really see much happening. We could have entered in this range, but personally, I like to see a clear break and some momentum in a direction that confirms my bias. So if we break it down to the H1, we saw the break of the range. We saw a bit of a retest. We saw the RSI become oversold. The moving averages were still bullish. Now, before I go any further, I'm fully aware that there's a huge thing on social media about indicators not working, indicators of retail, indicators for new traders, all that type of thing. But I think that's a big misconception. So they can be very powerful if you understand their use cases and you don't rely on them as a trade direction, and you don't rely on them too much, and they're just a way to time entries. So you can see here, every single one of these entries was was entered using moving averages and the RSI. But obviously the trade direction was built off economic data and outside factors like market drivers. So we see price pulls back in an uptrend. We see the RSI becomes oversold. So that's, for me, that's the 20 level or below. So obviously if we see a pullback within a trend, it's a great place to enter. So we just did that. Same situation on the second entry. We saw a bit of a pullback, and this lined up with the previous high right here. So yeah, RSI was oversold. And then again, it's just rinse and repeat the same technical process as long as the economic edge or whatever your edge may be is still valid.
Sure.
So for the third entry, that was just using the fib. So it's just looking for a 50% pullback. So the fib is just it's just another confluence. It's not a huge part of the strategy. It's just a nice way to confirm another confirmation for the entry. But yeah, I mean, moving on from that, we've got a second entry here because it was the same process. But this one doesn't seem to be going so well after the FOMC meeting. So we may be stopped out. And I've managed these trades in such a way that the initial position's been trailed. So that's locked in profit. The second position is break even. And these 2 final positions have a total risk of roughly 0.7%. So overall, if all these positions are stopped out now, it will be relatively break even, maybe a slightly profit. So it's not too much of a worry. And I'm happy to make a relatively small risk to make a potentially much larger gain. But yeah, we'll see.
And James, I like what you said. I liked several things that you said there. I think I've known Joe and yourself for a number of years now. I've spoken I think more with Joe over time, but anytime you have come on the show or I've watched you guys' content collectively, I love the no nonsense approach, and I also love that you point something out there that I think we mostly just have very similar styles, because you kind of start your analysis with the big picture. I know you guys also will consider like bank outlooks and bank notes and things like that, and so powerful if coupled with the true thing that moves the markets, which are the fundamentals, right? The market data that's coming in, what the Fed is going to do next. That's the stuff that really moves the market. And then I love how clean your chart looks. I mean, I could see the reason behind the analysis. I know you and Joe also, you guys love your moving averages, keeping it real simple. Your chart's clean. You're pointing out where you're adding to winners. I mean, I feel like I'm right at home. We trade very similarly. It's awesome. You're using similar time frames, trading the same sorts of markets that I do. So awesome to see it. So again, I'm with you too. In fact, I think we have the same trade on gold. And what I've noticed is that you guys use the edge finder, so we typically will find similar trades or ideas. Our entries might be slightly different, but it seems like we've got the same gold trade on right now, which of course we might both look like idiots a little bit, but you also have to kind of have to like take it with a grain of salt. You've had multiple entries. I've had multiple entries on the right side of this gold move. So if I take a loss on this one, it is what it is. I feel like I'm playing right now with house money, which sounds like I'm a degenerate gambler, but at the end of the day, we've had some good runs on gold. If it's done for now, it's done for now. But overall, I like the outlook for gold. I think it has potential moves to the upside. And real quick, I just want to mention we have a lot of people watching us here with us live. There's over 1,900 people. I wanted to give a plug to you, James, and to what you stand for. I think you have a website that you'd like us to send people over to if they'd like to learn more from you. Is that right?
Yeah, that'd be great if you wouldn't mind. It's just elitetraders.io. I can't type in the chat, but yeah,
we've got you right here. There it is. Producers got you on lock. Okay, awesome. So guys, check out Elite Traders if you have not already. James, if you're comfortable, I've been on air pretty much all day, so I'm going to go get a glass of water if it's cool with you. If you want to just take over the show, again, I trust your style. You sound just like my style, so I feel fine leaving the show with you for a little bit. You want to go for like 20 minutes, and then I'll come back and join you again?
Yep, absolutely. No problem at all.
Cool. Guys, stick around with James. Again, check out Elite Traders. Their website link was just dropped in the chat for you. And you're in good hands. James, you got the show for a little bit.
Great stuff. So there was a comment that I just noticed. It was very simple. It's what is a moving average? So we can start with a very, very basic topic. So a moving average is just these two lines that you see on the screen. So the red and the green. So all these do is just take the average price of your specified area and just puts it into an average line. So I've got the 50 and the 200. So this one takes the past 200 candles and puts it into an average, and that's what you see. So it's very, very simple. They act as dynamic support and resistance. They act as trend confirmations. But yeah, we won't go into, I don't need to break down a moving average too much. Don't want to bore everyone. So what I'm going to do is show you some trades that I've been looking at, that I'm in. So one of the ones I'm currently in, other than gold, is Pound New Zealand. We can go back to gold in a moment. I'll just cover some other things, and we'll move back to gold afterwards. I know a lot of you are interested. So Pound New Zealand is not looking good, but there is one thing that I can show you here that's quite a strong redeeming factor. Actually, it's not. It's changed slightly. Is this because of the date? Yeah. Okay, here we go. So this is seasonality. And I know the Edge Finder has a seasonal function, but this is Season AX. This is a platform used by trading floors. It's built specifically to display seasonal data. And if you don't know what seasonal data is, it takes in the market's performance, whatever market that may be, or the asset over the past 10 years, and it displays how it could potentially move over the current period based on previous data. So if you look at Pound New Zealand, very, very bearish over the past sort of 10 years combined. So, you know, you've got 2016, 2017, 2018, 19, 20, and 22, all very bearish years at this time of the year. So if we look at the dates, so we're at the 15th of May until the 10th of July, we can expect or could expect some bearish momentum. Although this doesn't take into account, of course, the economic factors, the market drivers that are happening right now. This is just based on past performance. So winning trades, obviously, this is if we're buying. So if now we're selling, we have roughly a 76% chance of a bearish move. But of course, we still have a bearish trend. So I'm happy to hold this position. And if we look at market structure, actually, let me just extend this to the right. So yeah, if we look at market structure in general, it's a very, very clear, or it was anyway, it was a very clear break and retest. So of course we were holding this support level. We broke down, came back up and retested, and then fortunately we came into quite significant profit, and now we're back into some drawdown. But that's trading. That's, you know, it happens sometimes. And in hindsight, maybe I should have trailed the stop loss. But you know, what can you do? That's just trading. So I'll go over one other position, and then I'll have a look at the charts and see what you guys are saying. So we had a trade on gold, on dollar yen. When was this? So we entered this last week, and we closed it today ahead of FOMC minutes for roughly a 1.5% gain, 1.4 give or take. But yeah, this was very simple. It's just trading the same model I just showed you, just waiting for the pullback within a bullish trend, or any trend, whether it's bullish or bearish. We enter once we've seen the confirmation, and that's it, just riding the wave. So obviously there was, again, economic factors to this. We all know the problem with the yen, the interest rates coming out of the negative interest rate policy. Of course, just because they came out of negative interest rates, it doesn't mean that their currency is now strong. Because if we compare, for example, the US dollar against the yen, just on interest rates alone, off the top of my head, I think the US dollar is around 5.5. The yen is 0.1. So as an investor, immediately, where would you rather put your money? Of course, with the currency that has the higher interest rates, which is the dollar. So it's very, very simple at the minute. You know, this trade doesn't take much brain power to trade the yen. I think it just takes a little bit of research and a bit of experience and understanding how this sort of thing works. But yeah, all very simple. So I'll go over gold one last time. You know, I don't want to keep going over gold. But yeah, this is the current situation. I mean, we've just had FOMC, so it's you know, it is just doing what it does. So you guys are very mixed. It looks like you guys are doing a lot of buying and selling. Hi James, do you use Bookmap at all? Is it any good? No idea what Bookmap is. Dollar news seems bullish. Can you tell me, James, where will you park money for short term? Well, I'm not parking money anywhere really. So I'm in these gold buys. All of these positions are still active. So it's a bit difficult really, because we're at all-time highs. There is no target. You know, we don't have a previous high to put to take profits at. There is nothing to go from. So in this case, we either set a hard limit financially that we're happy to gain, and that's it, where, you know, we don't be greedy, or we go for a specific level, whether that's, for example, 2,500, 2,600, 3,000. So I actually have some take profits set at 3,000. And the reason for that is because I've got a couple of take profits set here. So I think 2 of my take profits are set here, just so then I can book profits, get out of the trade, and then I can leave 2 positions running, or 1 or 2 depending, and sort of cut those off as price rises. You know, maybe take some partials. Partials aren't part of my strategy. I very, very rarely do that. But in this case, because we could see such a potential uptick in gold, partials are something I would consider doing. But yeah, overall 3,000 at the minute. I don't really see any reason we couldn't get there eventually. I mean, it would take a while, don't get me wrong. I'm not expecting that tomorrow, but maybe in the next 6, 12, 18 months, definitely possible. So we'll have to see. Margin calls for all the sheep. Yeah, well, I don't know. I think there's lots of people in very precarious positions. I think a lot of people are in buys and sells that could be going either way. You know, you could be in a position like me that's in some very nice buy positions and now suffering a little bit of drawdown on some additional positions. Or you could be a seller from all-time highs and, you know, maybe you're coming back to break even or even in profit. So, yeah, that's that. For euro dollar. Now, euro dollar is an interesting one. And the reason I say that is because short term, I could see us going higher with this. I don't really see any compelling signs that euro dollar will, you know, suddenly just drop off a cliff or even change trends. So what I think we could do is just draw some market structure. So we are at quite a nice sort of double top on the daily. You know, it's not surprising that we do see a natural movement from there. This is something I've been trying to explain to people, that it's a difficult mix between sort of scalping and position trading. So what we see oftentimes is people that scalp or even day trade, they prioritize technical analysis. But if you go down to 5 minutes, 15 minutes, maybe even half an hour timeframes or 30-minute time frame, things like support, resistance, moving averages, Fibonacci, all these things that people use as technical analysis is often disregarded. So you may, you know, for example, a 200 moving average on the 15-minute time frame, it might get bounced off a little bit. You might see a little bit of reaction here and there, but it will get broken quite easily. Whereas if we go to the daily and the weekly time frames and put the 200 moving average on, it's more than likely you will see large moves off those moving averages. And the same thing goes for anything else: support, resistance, you know, anything really. So these types of you know, supports and resistances mean a lot more on higher time frames, and that's one of the reasons people say, you know, higher time frame analysis or what's it called, top-down analysis is so important, because these levels hold more weight. So for me, this isn't concerning. I would have liked to have sold here actually, but overall I do think we can go higher. So I'm more looking towards this 1.09 1.095 and the 1.11 level. And the reason that I'm looking to go into shorts is because the ECB is looking to cut rates in June, and by the sounds of it, the Fed is definitely not. So it wouldn't surprise me if let's mark up the 1st of June. 3rd of June's fine. So if we look at this date, this is the sort of date that I'm looking to start shorting. And don't forget, we have price, fine. We have price levels, that's fine. But time is also a very important factor in trading. It's not like, you know, you can go in short now, expecting the ECB to cut rates in June, and then you might be surprised that you stopped out when you've been told that the rate cuts in June. So if we're looking to trade that rate cut in June, and the Fed isn't looking to cut the rates, then obviously we need to start looking at entering in June. We're not going to enter that right now. So for me, I need to see a higher price. I need to see sort of a break, a retest, and either this level or this level here. And then from there, we of course need to see sort of a lower high, and this would be my entry criteria. So if we're going, for example's sake, of course, we're going off here. Take profit potentially down there. I mean, this is the daily time frame, of course, so I do need to go down, scale down, do a bit more of the analysis on smaller time frames. But yeah, that's that. Let me just read the comments. Gold H1 closing 12 minutes. Buy what? Buy now. Sell gold. Buy dollar. Gold strong sell. It's so funny reading these comments, man. I mean, we get so many conflicting ideas, but no one seems to be able to say why. You know, we get this all the time, especially on sort of Twitter and Instagram. There's lots of people buying and selling, but a lot of it's sort of price action driven. So please don't forget that there are things driving the markets. Don't forget to pay attention to, you know, why is price moving? It's not because of a head and shoulders. It's not because of support resistance. It's not because of arrows that you've drawn. It's because something is happening that's causing larger parties or larger market participants to put large amounts of money in. Anyway, lecture over. Now, wheat. So wheat's something that I have only traded once, and that was very recently. So we are currently in buys. I can't remember the exact price because I closed out a lot earlier, but I know some of the guys in the Discord are still in these wheat buys. So that's very, very nice. So we're in these positions, but I'm going to take you back to seasonality, and seasonality means a little bit more when it comes to things such as wheat. And the reason is because wheat is heavily dependent on weather. So of course, if weather is not ideal for growing wheat or it disrupts supply, then, you know, obviously we'll see a lower price. So if we look here, this is quite interesting. So if anyone does have access to wheat, I would urge you to at least take a look. I'm not telling you to take this trade, of course, because I haven't actually done any deep analysis into this. I've just been looking on a surface level for now. So from until the 5th of September, 6th of September, look at this downwards movement in history. So if we look across the past 10 years, we've had 2 very minor positive years. All the other 8 years have been significantly bearish. Winning trades has been 20%. So for us, if we're shorting wheat, that's an 80% win rate or potential win, of course. So, you know, I think this would be a definite one to keep an eye on. I'm not sure if Nick's watching, but I don't know if Nick trades wheat either. I don't know if he could weigh in here, but it's definitely one I've got my eye on. It's definitely worth paying attention to. Who can predict gold price action? No one. So US 30. Actually, that's interesting. You should say that. So I noticed on the Edge Finder that we have just changed after FOMC minutes. So if we look on Edge Finder, we have US 30, we have NASDAQ and the DAX all in the top front runners. So I don't really trade US 30, so I will cover NASDAQ. I hope that's okay. I can go over the Dow Jones if you really want, but just for now, I'll go over the I'll just go over the NAS. So I did see something that actually catches my interest quite a lot. So from the fib, we draw from the previous the previous low to the high, which gives us our golden zone. So the golden zone, we just draw a rectangle and we just see, does this golden zone line up with any structure? Does this actually provide anything for us? And it does. If we look at this golden zone, what do we see? We see a huge level of support. Don't forget, this is on the 4-hour time frame, so this is quite a strong level. So we started as resistance here, broke above, and then it started acting as support. We just had our moving average cross. So that indicates to us that we're looking for buy positions because the trend has changed bullish. And now we are starting to see a little bit of bearish movements. I mean, this is, you know, it's not enough really, but it's something to keep in mind. So we could use the fib extension of the negative 0.618 level, stop just below the golden zone, just below the moving average switch. And this is a potential trade that we could mark up and wait to see what happens. The only downside to this is it's on the 4 hours. So this could take quite a while. So we could scale down to the H1 and see if we can get a different entry. So for example, you know, we could draw it from this high to this high, and this lines up with the sort of you know, small range we had in the hourly here. So this could also be a potential entry. So it depends on your trading style. If you're short term, this setup right here might favor you a little bit more. However, if you're more of a swing trader and you like to take your time with positions, and you know, you don't mind sitting on your hands for a little bit, this one might be a bit more up your alley. History has proven time and time again that the growth of wheat can be starved by a quick cut. Yep. So yeah, I think US oil, actually, yes, good point. So I was looking at US oil. Oh, it's got my USO USD. So I actually had an entry planned on oil. I'm very sad that I missed it. So if any of you were listening earlier about the model that I trade, it's just waiting for these pullbacks to 200 with the RSI and potentially the fib. And we had this. It was so close. And I called this on Twitter. You know, I put on Twitter that this was my plan for oil, and I missed the entry. It didn't quite come up enough for me to be interested. I walked away for, you know, I think I went to sleep. I'm not sure what happened actually at the time, but you know, I left the charts, come back, and we have seen this sell-off. So that was a bit hurtful. You know, that's one of those moments where you're a trader and you miss a great entry, and you kind of just sit there and look, and it's like, oh man, that's sad. But you know, I at the end of the day, I missed it because I was following the rules. It didn't quite meet, you know, it didn't meet the entry enough for me to take the trade, so I missed it. But that's the way it goes. So for oil, I do see oil going lower. I don't really see any potential, anything really upcoming that will stop oil from dropping off. Although actually this is oil against the dollar, so we could see some slightly higher movements. Sorry, slightly lower move. Yeah, no, sorry, getting my words mixed up here. Yeah, I don't see any reason that oil couldn't go lower. So because we missed the play on oil, I would need to see a break and a retest, and that's it. So breaks and retests, very strong. I really like break and retests. So in terms of profit levels, yeah, I think actually the current extension I've got marked would be fine. Obviously, stop loss would need to be a lot smaller. So something along these lines for oil may work out. If we can break through the support quite nicely, come up for the retest, bearish engulfing candle, we enter on that, and we should hopefully see some downwards movement. So could you do pound Australian, especially as you have pound on could you pound Australian, especially as you have a trade on pound New Zealand? Would be interesting. Yeah. Okay. Yeah. Okay. I'll go over pound Australian. Then I'll go back to gold. We can see what the situation is there. I think I saw USD CHF as well. So pound Australian, actually, you can see, you can see here, had some nice plays on pound Australian. Actually, we had, you know, quite good positions here, except this one. This one was a bit painful. Oops, didn't mean to delete that. Bit of a painful trade that we had to sit through, but that's what it is. I do like this actually to the downside, but there's not really anything in terms of an entry that's too gripping for me. I suppose this is actually a nice level of previous support. We could be retesting. Sorry, I've not looked at this market, so let me just do some research. Let me just see. Yeah, so that doesn't line up. Yeah, I do still like it to the downside. However, yeah, I just don't know where I would be interested in going into. So there's two levels here, and of course where we currently are, there could be sort of the entry points, if you will. But yeah, for me, this isn't something I'm too bothered about right now.
James, how you doing?
Oh, hey, James.
Yes, the other Forex James is back. The real Forex James is back on stream. No, I'm kidding. Hey, we really appreciate you helping us out today. I'm sure that you're getting a little tired of staring at the charts all day. I know it's getting late over there in the UK, but I really want to thank you again for coming on the stream. Now that we're kind of in contact, you know, maybe we could talk off air about you coming on the stream some more, because I know we really enjoyed it. Nick really enjoyed talking to you. The audience definitely enjoyed it as well. So yeah, I want to thank you for coming on. Anything else you want to say before you head out?
Nope, all good. Thank you. I appreciate everyone watching. Appreciate you guys for having me. Yeah, I'd be happy to come on in the future. So yeah, all good.
Awesome. Awesome. Yeah. And guys, we got Elite Traders right here, the link to his website. Go support James. Go check out Elite Traders. We really appreciate him coming on today. And yeah, James, maybe we can do this again in the future.
Yeah, absolutely. Yeah, for sure. Yeah,
right,
thank you again.
Yep. Have a nice night, man.
Yeah.
All right. We cut him off before he said he was saying you too, and we accidentally cut him off. James, we apologize for that. All right, let's see. Let's get set up here. I haven't shared my screen yet. We have been streaming for 4 hours. 4 hours at this point. Oh, I do have it open. Give me 1 second here, you guys. Give me just 1 second here. Doing this on the fly. All right. All right. Is the audio good too, by the way? I always mess around with this microphone in here. We got new microphones. I'm going to hold it up. Sorry if it's like really loud. We got these new microphones that are really cool. And I keep messing with the audio gain and whatnot. I'm sure that me putting it down right there was like stupid loud, and I apologize. Sound good audio for me. Bit low. Yeah, let me know, guys. Let me know. We got 1,300 people watching. If it's a little quiet, I can turn up the mic gain. If it sounds good, or if it's like a little low, then maybe turn your volume up. But all right. So here's what we're doing. We have an hour until NVIDIA earnings. Nick will be back in a little bit. But if you can't tell, we're about to get into everyone's favorite segment, the stock segment of the show. We have a few things to go over here today. And I'm going to mute my mic while I open this LaCroix so I don't blow y'all's eardrums out. Give me 1 second. There we go. All right. So the portfolio has actually been performing quite well recently. We can see over the last 5 days, right here, right up top. Where's my mouse? Right here. We can see over the last 5 days. 2 days ago, no, yesterday. Yesterday was our peak portfolio performance. Say that 5 times fast. Was yesterday at $521.90. Today we are down a bit. We're down almost 1%, almost $5 whole dollars. We're down today, but that's all right. We've got some things that are performing really well, like Tesla, for example. Tesla makes up the majority of our portfolio, actually, and it's our top performer, which is awesome. Makes up 11% of the portfolio. So far, we've gotten back $6.50 on our initial investment. We put $50 into Tesla. I was a bit skeptical of Tesla. Oh, Warner Brothers. We're going to get to that in a second. I'm upset about something. I was a Tesla skeptic because it was so. It's just been in a downtrend for so long. But maybe, hopefully this was the bottom of this little downtrend, and now we're on our way back higher. Maybe people have turned around on Tesla stock because it is our top performer. We can actually see we entered down here, likely on one of these two candles here. We're trading a lot higher today, down a little bit, but not too bad. All right, so let me talk about what we're getting into today, because if you are unfamiliar, this is our community stock portfolio. And when I say community, I mean you guys, the people watching right now, have been voting in our Telegram, which is free to join, by the way. We'll drop the link to that. If you want to join our Telegram and vote on what we buy and sell inside of this portfolio, you can do so. You guys have been voting. This is what we have. We have spent our $500. We had a $500 starting budget. We have $9.63 left that we will spend today. But overall, We've spent the original 500 in the trading account, and now we are watching it grow. Thankfully, it is up $19. That's our open P&L. Okay, so here's what we're getting into today. We're going to pick some stocks to sell, and then we're going to take the money from those stocks and invest it back into the portfolio by adding more to some stuff that we already own, because we have a really wide range of stuff here. I don't even know how many different stocks we have in the portfolio. It looks like we've got, 20 something, maybe even 30 individual stocks in here. I could take the time to count. I'm not going to. We have a lot of stuff in here. We're going to choose something to sell, get a little bit of money back, and invest that back into the portfolio. And I have a special surprise poll that we'll get to at the end. Before we get into any of that, though, I want to try something. And I need my red Roaring Kitty bandana, because I got some news that I'm very distraught over. And it involves Warner Brothers. Is there anybody, let me see. Is there anybody in the chat? We got 1,000 people watching right now, over 1,000 people watching right now. Is there anybody in the chat that's a big basketball fan, a big NBA fan? I know this is a trading live stream, but this is the 30-second sports segment of the show when I come on stream. Anybody at all? Basketball? Marcus says he's a big basketball fan. Well, I'm a huge basketball fan. And the news came out today that TNT, Turner Network, which is a subsidiary of Warner Brothers, they have lost the media rights to the NBA, which means inside the NBA, the show on TNT with Shaq, Ernie, Kenny, and Chuck is going away. This is Warner Brothers Discovery stock. So like I just said, Turner Network, Turner Sports, is a subsidiary of Warner Brothers. Here's Warner Brothers stock. Not very good. I saw a report that said that I believe that there's something like $40 billion in debt. Marcus says, no way. I know, right? That's how I felt too. So here's what we're going to do, guys. We're going to pump up Warner Brothers stock. We can do it, all of us. We can pull another GameStop and we can save inside the NBA. If we make Warner Brothers stock look like GameStop, then maybe we can save inside the NBA. I'm just kidding. That was I got that news and I checked out Warner Brothers stock and I was like, I'm not surprised that they're losing the rights. They have no money. I wish it weren't the case, but they have no money. All right. That was my stupid basketball bit. All right, now we'll get into the real stuff. Here we go. So again, join our Telegram. This is what it looks like right here. Right here. This is our Telegram. And we haven't done it in a little bit because again, we spent most of the money, but we have polls. We would do polls right here where you guys actually get to vote and choose what we buy and sell. You can see here, you guys voted for Tesla. We bought more shares of Tesla. You guys voted for Google. We bought more shares of Google. Buy or sell GameStop when that second pop happened. That was crazy. 50%, 51% said buy, 49% said sell. The sellers were right in that instance. Are you guys familiar with the whole second GameStop situation, by the way? It was a bizarre. If you guys haven't seen this, I'm actually going to make a video here. I'm working on it. I'm working on the beginning stages of putting the presentation together right now. Well, not beginning stages. I put like half the thing together already, but we're going to do a video on the second GameStop GameStop rally, because I have some conspiracy theories that I don't want to get into too much. I don't want to spoil the video. You guys are going to have to check that out for yourselves when I put it up on the A1 Trading YouTube channel. Go subscribe, by the way. But I have some conspiracy theories about Roaring Kitty. Roaring Kitty, if you don't know, he is the guy that started the original GameStop rally. Roaring Kitty, Keith Gill. This is the guy that started it all with GameStop, Wall Street bets, all of this. He's the guy. This is his Twitter. And just before this big old pop here on GameStop that just happened a couple days ago, he came back after a 3-year hiatus. He had not been online in the 3 years since the initial GameStop rally that everyone remembers that went so crazy. He disappeared for 3 years. He shows back up, and one day later, this happens. And his Twitter is real interesting. All of these memes and GameStop stuff were posted within a week of each other. This is all the same week. 3 years he's gone. He shows up 1 week. GameStop goes crazy. He's tweeting every 30 minutes. I have some thoughts, but you'll have to wait until the video to actually hear those thoughts. All right. Back to the Telegram. So join our Telegram, link below. You can vote on what we buy or what we sell. And I'm going to go ahead and put the first poll into the Telegram right now. So go ahead, go join, get ready. If you want to vote on what we sell, that's what we're getting ready to do right here. Go join the Telegram. Totally free to do. What should we sell? And remember, this is whatever we sell. We are then going to do another poll. That money is getting put back into the portfolio. So sorry, here's my list. All right. I was reading the chat a little bit. So are we going to sell? These are 3. I'll show you the bottom of the portfolio. This is the stuff that's not performing quite as well down here. Most of the stocks that we have bought are actually positive. The green obviously here is positive. So even though, this is like, you got 2 cents back, 2 cents is basically break even. It could be worse. It could be negative. We actually don't have that many stocks right now that are performing that poorly. But again, we want money to invest in stocks that are performing well. And we're having a little bit of fun. So number 1 on the list of what we should sell, what we could sell, I should say, McDonald's, MCD. We own a little bit of McDonald's stock. Toyota, TM. We own a little bit of Toyota stock. And last but not least, DoorDash. McDonald's, Toyota, DoorDash. These are 3 stocks that we own. What should we sell? Poll is now live in the Telegram. Go join the Telegram if you haven't already. You can be part of the 35,374 other subscribers that we have in the Telegram. Come on, guys, it's a party. And we're voting on what we should sell. So let's take a look at those charts right now. Let's take a look. We'll go down the list. We'll look at McDonald's first. MCD. So we own McDonald's stock. Has not been performing very well, but it's also been in a downtrend for a while. You can see we're taking a look at the daily chart here. And for a long time, in fact, let's look at a weekly chart so we can see a little bit better. For a long time, this thing did nothing but rise. McDonald's could do no wrong. I mean, tiny pullbacks here and there, but ever since like 2003, if you just bought it in 2003 and held on to it, you're a trillionaire. However, we've hit a strong level of resistance. We can see these two different tops, right? Bang, we hit it here in March of 2023, couldn't break through, pullback, hit it again, June 2023, even deeper pullback, came all the way back up. We bounced around it a little bit late 2023, early 2024, and then another pullback. And it looks like to me, because we've already we haven't gotten through this candle yet, but this looks like the main level of support right here. And we've already traded through that. So this thing could be in a big downtrend all the way down to these, this level right here, which I don't want to hold it if it's going all the way down there. I'd rather buy it back after it touches this support here and then bounces off and rallies back up towards the highs. That's when I would like to get in. I don't want to hold it if it's going to continue to fall like that. So that's McDonald's. That's the case for McDonald's. Let's take a look at Toyota. I can do this. TM, Toyota Motor. All right, here's Toyota. Toyota, kind of the same thing. Big rally, especially in 2023. Big rally. Overall, the stock continued to rise, not quite as dramatically as McDonald's. McDonald's was kind of just like a straight line up. This one, you see consistent pullbacks, but nonetheless, year after year, we're looking at some pretty solid growth. But this rally may have just been too much. It may have been too strong, too fast, because this is a deep pullback here. And if we break through this level of support here, or maybe even this level of support, I think this thing is just falling, right? We kind of have a head and shoulders pattern here. It didn't bounce off any support here. It just continued to fall. This thing looks like it's in a downtrend. And we don't want to hold on to stocks that are in a downtrend. I mean, look, we bought it way up here. Granted, thankfully, we're only buying partial positions here. We don't own full shares of this, or else we'd be down a lot more money than just how much are we down on this? We're down $2.95. Could be a lot worse. But, I mean, look at how far it's fallen since we bought it. So, definite downtrend on Toyota. May or may not want to hold on to it any longer. Here's the poll. How many votes do we have in right now? We have 57 votes in right now. Go get your votes in. I'm going to throw my vote in after we take a look at DoorDash here, although I'm pretty sure I know which one I want to sell already. So go get your votes in. Only 57 votes in. Whatever has the most votes, we will sell. Dash is the last one we're taking a look at. Here is DoorDash. I don't know if DoorDash is the same as these companies like Uber. Uber apparently has never been profitable. Just the way that their business is set up, no matter how popular it is, no matter how many people are using it, somehow they just can't get their net revenue or net income high enough to actually break through and become profitable again. I don't know if DoorDash is the same way. I think we just happened to get in at an unfortunate time because it was trending higher, actually. It hit the market, and like every other stock that what's the word I'm looking for? I forget what I'm looking for, but all these new stocks, you can see it with Reddit too. Reddit was a good example. When these new stocks hit the market, they trade higher for like 2 days and then they fall. That's why we sold Reddit, because I was big on Reddit. I was ambitious. We bought it like here, and then as soon as we bought it just did nothing but fall. And then I swear, I think we sold it on this red candle here. I really think we sold it on this red candle here right before it came all the way back up. Dash, however, DoorDash, we can see kind of the same thing. Hits the market, shoots up, comes back down, and then it collapsed after that until it had this rally, and that's where we bought. We bought at like the peak of the rally. Not quite the peak, little bit of a pullback. It would have been nice if it pulled back, hit this level of support, and then moved higher, broke through the highs. That was not the case. In fact, this must have been earnings. It gapped lower, and it clearly consolidated here and broke through that level of support here. All these candles in a line right here looks like a big glob of consolidation. And then within the last 2 days, we broke lower through that. Again, not a good look. It seems like a downtrend. Not something we want to hold on to. And it is our biggest loser in the portfolio. We're down $2.66, 13.3% overall on DoorDash, down $1.47, 8.71% overall on Toyota, and McDonald's, we are down only 7 cents, 0.34% overall on McDonald's. So there we go. Those are our 3 sell options, 69 votes in. My vote to make it an even 70. You know, I really wanted to go DoorDash, but now I'm thinking maybe Toyota. I don't know. Gosh, I don't know. I really don't. At the end of the day, it's not up to me. It's going to be whichever one has the most votes. So me sitting here racking my brain over this may not even matter. All right. My original thought was DoorDash. I'm going to vote DoorDash. McDonald's is number 1. You guys want to sell McDonald's? All right. We're selling McDonald's. McDonald's it is. That was the one that I definitely did not want to sell, but unfortunately, it is not up to me. All right. How much do we actually have in McDonald's, by the way? So we put in $20. Obviously, we've lost money on that. We only have $19.93 left. $17.35 for DoorDash and $18.26 for Toyota. So silver lining is by selling McDonald's, we're actually going to get more money back into the portfolio than if we sold DoorDash or Toyota. But we're going to close out of our McDonald's position. The chart set, or the telegram, the poll says so. We must abide by the poll. So McDonald's, unfortunately, we are closing out. Oh, wait, I don't think that's what I want to do. I think I want to do this. Oh, wait, no, that's definitely not what I do. That is definitely not what I want to do. Here, I'm going to do this. Close. Oh, shoot. Is this making an options order? I think I might need Nick in here. I think I might need a Nick to come save me. I sold Reddit. How did I sell Reddit? Because this doesn't mean that I'm flipping it and I'm gonna sell it from here, right? I guess I didn't do that with Reddit. Oh well, whatever. Let's see what happens. Okay, yeah. So that is what I want to do. We are now closed out at McDonald's. I heard Chandler say he figured it out. I did. I figured it out. I don't know. I got confused. I clicked on that, and then it looked to me for a second like it was like you're going to close it and then sell it immediately, which I didn't want to do. But that's not what happened. You can see our cash balance now is at $29.55. So here comes poll number 2. Poll number 2 is, what are we going to buy? We just took that money from McDonald's. we're now going to put it right back into the portfolio with either, and you're going to like these ones. What should we buy? Should we buy Google, Amazon, AMZN, or personal favorite, near and dear to my heart, Lockheed Martin? All right, poll is up. What should we buy? Google, Amazon, Lockheed Martin. Let's take a look at the charts really quickly, and then we will get to our third and final mystery poll. Google up first. Goog. Here we go. So here's Google. We entered here around $161 a share, and it actually gapped higher thanks to earnings. Shout out earnings season. Google is our second most profitable stock in the portfolio. We are up $5, 10% on Google. So should we add more to Google, or should we add to Amazon? Amazon also performing quite well. We bought right here around $179 a share. Since then, had a little bit of a pop higher. It actually has come back down a little bit since we entered into Amazon and we had this first initial little pop. But that's okay. Downtrends are normal, just as long as we don't go past here and we start losing money, right? And then last but certainly not least, we have LMT, Lockheed Martin. Lockheed Martin had a very poor, I forget what caused this, very poor month in December, January, but has rallied since then. And because of some geopolitical factors happening around the world right now, has had a really big surge, really big rally recently. I think also trading at near all-time highs, and currently trending upwards, which we like to see. So currently trading at $468 a share. Amazon currently trading at $182 a share, and Google is $177 a share. Google, second best performing stock in the portfolio. We put $50 in. It's up 10%. Lockheed Martin, only $10 into Lockheed Martin, up 4.32%. And Amazon $20 in, up 1.8%, 36 cents. Okay. Lockheed, Amazon, Google. Lockheed, Amazon, Google. Lockheed, Amazon, Google. We have 47 votes in. I will wait just a minute. Let's see if we can cross 50 votes. See if we can cross 50, and then I'll put my vote in, and we will buy. Then we're going to do our final mystery poll, and then Nick is going to join us back on stream and close out with NVIDIA earnings. I see the LK channel in the live stream chat says buy Google. You can join our Telegram for free. Links down in the description below if you want to vote on buying Google. We've crossed 50 votes, so I'm going to go ahead and put my vote in. And my vote is also for Google. I would like Google as well. You guys agree? Claps in the chat for that. Let me get some W's in. I've never said, can I get some W's in the chat for Google? See how many W's we can get in the chat for Google. W's in the chat, guys. That's what a real streamer says. W's in the chat. W in the chat. Oh, that was Chandler. Oh, I got excited for a second. Sorry, not to get not excited for you, Chandler, but I thought people were giving me some W's. All right. Let's buy $20 worth of Google. We are adding to the portfolio. Adding to the portfolio. Oop, not limit. We want a market order. Market order of $20 by Goog. We're buying $20 market order. Google. Buy it. Back in. We have added to our position on Google. We had, how much did we have in there? $10 or 20? 50. We had 50 in there. Google now makes up the largest percentage of the portfolio. It was Tesla. I guess technically Tesla and Google both had $50 invested, but we now have $70 invested into Google. That is almost 20% of our original starting $500. Almost 20%. That's quick math. Hey, I got W's. Hell yeah. I feel like a real streamer now. All right. Final mystery poll before Nick joins. We have this $9.55 here. I already know what the answer is, but I'm going to throw it in the Telegram anyway. We all know the answer. Should we buy NVIDIA before earnings? I had some here. Yes, to the moon. No, we're past the rally. Should we buy NVIDIA before earnings? Now, I should say we do already own some NVIDIA. We actually own, we have invested $20 into NVIDIA. It's up 4%. That's 80 right now, 83 cents in return, and it's moving a lot. You can see the open P&L bouncing up and down right now because we are inching closer and closer to those NVIDIA earnings coming out. Where is our NVIDIA position? Let's see, NVDA. NVIDIA, here it is, currently trading at $946 a share. We got in at 908.75. So the share price has increased almost $40 since we bought our initial share, our initial $20 partial share. You can see this, I think, is just really fun. You can just see all the orders coming in. It's crazy. People are getting ready for NVIDIA. We are at just about the all-time highs, correct? Yes, we are. So already at about all the all-time highs. Nick and I were talking about NVIDIA earlier. Nick believes that he doesn't doubt that the NVIDIA earnings come back better or good. I agree with him. But the real question is, do they far exceed expectations to, get you a big green candle or a big, I guess the markets may even be closed by the time the earnings actually come out. So are we going to see a big gap higher on the price of NVIDIA tomorrow at the opening bell? We will see. Haiti, thank you for the €1. Shout out to Haiti. W's in the chat for Haiti. Thank you for that. What time are the earnings reports? NVIDIA is coming out at about 4 o'clock. So we are less than 30 minutes away from NVIDIA earnings. Let's check on what might be the most irrelevant poll we've ever done. Should we buy NVIDIA before earnings? Only 27 votes in, but I have a feeling I know what all. Nick, do you think all 27 votes are yes, or do you think anybody says no to NVIDIA?
I bet there's going to be some people who are saying no to it, but it's probably going to be yes.
I think I would be surprised if we got even 5 people that said No. I'm going to click yes. Oh, actually.
Wow.
So
16,
we have
18?
50 votes in right now, but two-thirds say buy.
Okay.
So we're going to take our last little bit of money left in the portfolio. We only have $9.55. We are going to buy NVIDIA market order. Dollar amount. Can I do exactly $9.55? That would be cool. Buy. Yes. Buy. Done. And just like that, somehow we have 1 penny left. Don't know how that works. But
don't spend it all in one place, James.
well, we didn't. That's why we built a portfolio. We've spent it in lots of places.
We got lots of names now. That's awesome. Well, NVIDIA, guys, is just like 20 or so minutes here. And if you're wondering why, we've spent this whole day live streaming, it's all come down to this. Meeting minutes was, of course, important to the market, but NVIDIA is, in terms of stocks, it's like kind of everything today. So as James was mentioning, we got to see this thing really beat in order to get the market to get excited to move substantially higher. But we'll have to see. James, thanks for doing the stock segment here. Remember, guys, if you enjoy those stock segments, we do all of our votes inside of the Telegram channel. I think, James, you mentioned that earlier. If you guys would like to vote on future holdings in our public portfolio, please make sure to join the Telegram channel. Totally free to do so. And again, Haiti, thank you very much for the €1, my friend, or £1. Thanks so much. And with that said, James, we'll relieve you your duties. I know how exhausting it is. So thanks for doing the show for us.
No, it's fun. But also, I should say, or I want to say, I think here pretty soon, we may have to invest a little bit more into the portfolio. I might deposit some,
build out a little bit more into the old account. Well, it's doing pretty well so far. We're up $17 on a $500 account, which, if you're talking to the degenerates, they'd say that's nothing. But in terms of long-term, slow and steady investing, I don't think there's anything wrong with just kind of
we opened up the portfolio. Let's see, on March 22nd. So it's been exactly 2 months since the portfolio opened, and we're up 4%. So
that's pretty good.
4%, 2 months, and it's if we had put all 500, into Tesla or Google, it may be up a little bit more than that, but we have a really wide range of stuff here. And so 4% in 2 months, that's cool to see. And we may need to deposit a little bit more in here so we can add even more to it.
The journey continues, the investing journey. That's awesome. Well, thanks, James, for doing that segment, and we'll catch up with you in just a little bit.
Yep. All right. See ya.
All right. See ya. Guys, we're getting close here. Countdown to NVIDIA earnings. As again, after the bell today, we do hear from arguably the most important stock in the market right now, simply because we've made these points many times, but just to reiterate why this is so important, NVIDIA is the picks and shovels supplier of the AI trade. Now, the AI, let's talk AI for a second. Why is NVIDIA so important to this? Well, everybody knows that you can now play around with ChatGPT and you can have it draw you cool pictures or answer your homework questions and things like that. But in terms of the stock market, the bigger question is, how does this actually turn into money? Like, how do you use AI to make money? And there are some ideas, but there's not a clear and obvious significant path to short-term profitability from AI. Things are still wobbly. ChatGPT's come a long way, and Gemini and all these softwares that are coming out are
wobbly. They're improving every single day, but the point is, in the meantime, the market is always looking for, easy profits, regardless of how exactly AI becomes a substantial monetization tool. The big story is that no matter how it does, everybody needs chips. They need the underlying, tool that it's all built on, which is semiconductors. So NVIDIA has gained tremendously because it is the top of class when it comes to chips. So for companies who are looking to utilize artificial intelligence in their process, NVIDIA is the chip seller. So they're the picks and shovels of the, the reason I say picks and shovels is that, back in the gold rush days, everybody needs a pickaxe, right? So if back in the US, I think it was like the 1800s, people were rushing to go out west to try and go mine for gold because there was a gold rush. They'd found gold in California and everybody wanted to go rush out there and get a piece of the pie. But the real money was made from all the infrastructure and the picks and shovels companies that, who knows if, Joey is going to go out there and strike it rich with gold. Maybe he does, maybe he doesn't. But one thing is for sure, Joey needs picks. He needs a pickaxe. He needs tools to go purchase in order to go out there and mine. So my point is this, NVIDIA is the picks and shovels. They're the pickaxes of the modern day gold rush or the AI. Now, again, exactly how profitable is AI going to be? That's up for debate. That's up for, innovation and progress over time to determine. That being said, there are some ideas that are kind of forming. And one of the ones that I see is perhaps a little bleak, but the reduction in jobs for some companies could substantially make short-term monetization make sense for AI. If these products created by AI, if generative AI becomes kind of stronger and stronger over time, it may reduce the need for certain jobs. It may create other jobs in other places, but for companies that are out there looking, how can I utilize AI? Well, maybe your most expensive thing in a company is your payroll. And so at the end of the day, if generative AI gets to a point where it can start to outsource certain jobs, that is, to me, one of the most obvious ways that AI could become. So my point is this: what does this have to do with NVIDIA? Well, everything, because if the monetization tools that AI gives you become more clear, the demand for AI chips goes up and up. So today, we see a little bit of that relationship in their earnings report. I'm very, very curious to see what this earnings number does, because if you get NVIDIA earnings that are rock star and forward looking, like guidance going forward is huge demand for chips from all these companies, and perhaps they're starting to see massive demand and innovation and research and development and investment into chips, it could show that companies are again, that trend is very powerful for NVIDIA, but also for the market itself, because if there's a huge demand for chips and AI seems to be bringing some efficiency to the picture, then the market can continue to squeeze higher. Now, one market that Chris Pulver, who was on the show, at this point, hours ago, we've been live all day long. When he was doing the show, he was talking about utilities. Utilities have been an area of the market that is an incredibly boring. This is the grid companies. These are your, power companies and infrastructure companies. The demand for power companies could substantially increase from AI. I don't know if you guys have seen this, but I'm pretty sure that a Google search is like a third of the power usage that a Chat GPT prompt is. I saw that in some post somewhere. The power demand is much bigger for like a lot of AI stuff. So if chips are, developed more and more is going in that direction, The grid is another kind of picks and shovels, I think, obvious play that has really kind of taken root this year. And XLU utilities, power companies, like the most boring stuff you can possibly invest in, is actually doing the best. I think it is the number one performing industry or sector of the sectors that we talk about so often on the show. So as we inch closer to NVIDIA earnings, SMH, this is a semiconductor ETF. What an ETF does is, if you're new, an ETF allows you to buy many stocks in one single basket or ETF. And so the SMH has been, actually on a weekly chart, it's now reaching back up to the highs. And that either extends itself today or it stunts itself. The rest of the companies, if you're watching AMD, if you're watching, which by the way, AMD doing really poorly, not nearly back to its highs like NVIDIA is. Qualcomm, I believe they make a lot of chips for the Apple products, like the iPhones and maybe Samsungs as well. They make a lot of chips for phones. So these companies are doing well, but it all pales in comparison to the reigning king, which is NVIDIA. So NVIDIA earnings are going to set the tone going forward, I think, for tech stuff in the markets. So I'm very curious how this shapes up. As we take a quick look at the indices here going into this report, you've got the S&P 500 just down slightly, breaking through the all-time highs, and you've got the NASDAQ also doing the same. Today's Fed commentary, a little bit squirrely. People wondering whether or not that Fed is going to cut rates, or with their comments today, a little pushback on that, because again, inflation was mentioned as still being problematic. They need more proof, a little bit of hawkishness, right? And that hawkishness is not appreciated by the markets, a little scary to the markets. You can see it disproportionately impacting certain parts of the market that are more sensitive, like RTY is the US small caps ETF. Index, the Russell 2000. IWM is the ETF that if you're looking to trade small caps, that's kind of the predominant one. IWM, down 1% on the day, just about. The Dow Jones is down 0.66%. And you take a look at the VIX. The VIX is up nearly 5%. At one point today, it was up even more. And again, countdown starts now. We are just about 10 minutes out from NVIDIA earnings. Very, very curious. Somebody asked, where's the S&P 500 heading? Well, again, we're going to have to wait to see what NVIDIA brings, because I am not here to, forecast or gamble on what I think will happen. But let me point this out. Most likely, NVIDIA earnings will be good. But everybody expects NVIDIA earnings to be good. So James was touching on this before he stepped out of the show. He's pointing out our discussion, him and I's discussion about NVIDIA earnings today being, everybody knows that NVIDIA is an incredibly profitable company. And everybody knows that if you look in recent times, look at these greens versus reds. Greens are times where they beat their earnings estimates, and red, the sole one that we see here in late 2022, these were times that the market missed on their earnings. Or not the market, but NVIDIA specifically. NVIDIA most of the time beats their earnings. It's a repeatable trend, but that doesn't mean that every time they beat earnings, the market rips higher for NVIDIA. Now, it may feel like that, definitely seems like that in recent years, because NVIDIA has been just a freight train of a stock. But remember that them beating is one thing, but they need to dazzle the market in order to get really, really strong earnings. Strong price action reaction. And if you're going to see the S&P 500 move up or the NASDAQ move up, you don't need to them. Beating is not enough, right? Beating their numbers is not enough to get the market to rip higher. They need to smash their earnings in order for the market to rally. Not only that, their forward guidance for their future projected earnings needs to smash expectations. I made this comparison to James earlier. We were talking about expectations versus reality, and we compared it to sports. Now, I'm not the guy to ask about sports because I don't know that much about sports, but I can understand enough that if everybody knows that certain player, let's say Ronaldo or, Peyton Manning, I mean, just people who are obviously very good at what they do in the sports world, everybody expects them to play really well. So it's no question that there's a very high probability that they're going to play really good. They're going to have a great season. They're going to do great stuff. But are they going to be just top of their game ever? That's the question. That's the debate, right? If you ask about any particular athlete, are they at the top of their game or have they peaked? That's a debate, right? Everybody knows they're good. Everybody knows that NVIDIA is the top company. Are they at the top of their game, the pinnacle? Are they just expanding way faster, or has the top been set? That is what we are going to look forward to and find out as we narrow in on NVIDIA earnings in just about 9 minutes. So does this apply to you if you don't trade NVIDIA stock shares? Yes. I don't trade NVIDIA, but I'm hyper fixated on it today because I watch the indices. I watch the sectors. I watch, the NASDAQ, the S&P. I have a position on XLK. By the way, I'll show you my position on XLK. So I have a long position on XLK. So check this out. Here's XLK. I am long. I have also sold a 215 call against my position. The call that I've sold is going poorly, but the underlying position is up very well in the last month. If today, I kind of have a hedge on with this position. So if NVIDIA earnings don't even have to disappoint, but if the outlook or the guidance or whatever is not stellar and the stock drops, XLK will probably drop too. Okay. So I've got a bit of a hedge. If the market drops, I will make profits on this XLK 215 call that I've sold. And if the market rips higher, then I will be taken out of my position for 1,000 shares because I sold 10 contracts at 215. So I've got a bit of a hedge going into this. Now, not everything is hedged because I also have VOO. I just have a straight position on the S&P 500 here, which I entered into in April. I don't plan on closing this trade at this time. If it rips higher, then great. I may sell a covered call against this position and collect some premium. And if the market dips, then I'll just continue to hold. This one is more of a swing trade for me. So again, going into the earnings, I am watching the indices really closely. I'm very curious to see how this plays out. Tomorrow, I will probably be taking lots of trades. I would like to see the NVIDIA earnings and then with it, make some decisions on what I'm going to do with some of my trades. I might be selling some calls. I might be doing some stuff with the indices tomorrow. But personally, I am waiting and watching to see what the NVIDIA earnings bring to give me a more clear picture. And then tomorrow, I will be placing some trades. Speaking of placing some trades, if you guys would like to see the trades that I am taking in real time, I post all of the trades in our Discord community, which if you'd like to sign up, we are currently doing a 45% off discount. So if you're not already inside of the Discord channel, we're going to drop a link here in just a second into the live stream chat. If you'd like 45% off, we're doing our biggest discount that we do all year long right now for our Discord community. You can come trade alongside me, get notifications of each and every trade that I take. If that's something that would be beneficial to you, whether it be commodities, indices, FX, options, stocks, I trade a lot of different things. We also have Frank sharing his trades and Ivan sharing his. If you haven't joined and you're interested in doing so, click this link. You'll be connected with a real person on our staff who can give you some information about the 45% off discount that we're doing and get you signed up, get you in the Discord before the trading action that happens tomorrow. Tomorrow should be a big day in terms of activity. So stay tuned for that. And if you're not in the Discord already, make sure to join us with that 45% off discount by clicking the link that just was dropped in the chat there for you. Should also be findable in the description if that's easier for you. So we're getting close, just a few minutes away. I'm going to do my best. And also, if you guys could do me a favor, when NVIDIA earnings come out, if anybody has the numbers, please do us all a favor and share them in the chat. I'm going to be looking for them myself. I've got Financial Juice open. I'll be looking on Twitter. And it's always a little bit of a scramble when NVIDIA earnings come out to find them on social media. It's not quite as easy as like Forex Factory or FX Street. Alan says much respect for streaming so long. It's been a long day, but Alan, we've had just an awesome day of streaming. We had just several different guests who took over the show, and we made it. I mean, we are just 5 hours into the stream. My goodness, it's been a long streaming day. If you've enjoyed the stream, can you guys do us a quick favor? I think last time we hit 1,000 likes on the stream. What are we at, Chandler and James? Let me know in the comment section here. I'm just curious, how many likes do we have on the stream? I haven't been pressing for them all day long, but I'm just curious. If you guys could do me a quick favor, help us out. We've been streaming for 5 hours straight, rotating guests in and out and trying to give you guys the best coverage that we can possibly do as a team here. A1 Trading is dedicated to bringing you guys the best market coverage possible. If today has been helpful to you at all, we're at 600 likes. Could we just smash the living heck out of that like button and try and get it up to, like, I don't know, 700? That would be amazing. There's 1,000 people watching. Well, we got 1,000 people watching. Some people on Twitter, some people on YouTube, wherever you are. If you could just support the show, again, and everybody involved on our end would very much appreciate your support, and subscribe. Yes, and subscribe, says the producers. Make sure, subscribe, follow, wherever you are. We just appreciate you guys hanging out with us. We've had good commentary from you guys and an involvement all day long. Okay, so yeah. When is the membership sale ending? Just message us. We'll give you the information. I'm not actually sure, but we will. It ends soon. So get in contact with somebody if you have not already about the membership sales, so you can get in and get involved before that ends. Countdown to NVIDIA earnings. I'm going to do something here. I got to set this up. Let's set up our chart here. So we're going to do. I want to do. Let's set this up. Okay, so let's do NAS 100. We'll keep NASDAQ up here. Let's put SPX 500 here. Okay, SPX is going to be bottom left. And I'm going to switch over to 5-minute candles here. We may be in for a little bit of a wait here. Earnings are always a little funky. Sometimes they drop right away. Sometimes there's a bit of a delay. But we're coming into market close, and we will see here what we can do. 5-minute chart for NVIDIA is in your top right-hand corner. What's the last chart you guys want me to pull up? Comment something really quick. Got 1,000 people hanging out with me. Smash the thumbs up button on the stream. Also, what chart should I put in our fourth quadrant? We got NASDAQ. We got S&P. We got NVIDIA top right. This is the main event here. DXY. Okay, we'll put DXY. I think I've seen a couple people say gold and dollar. We'll put DXY. Just note, the dollar index tells you what you need to know about gold as well. So we got, 5-minute charts here coming into NVIDIA earnings in just about 2 minutes to go. 5 hours into the stream, just a few minutes to go. Shout out to you guys. I'm just curious also, who has been here? How long have you been watching the show or had it tuned in? I know probably you guys are like working or you're trading or you're studying or something. Just take a second really quick. I'm just curious. How long have you been watching today's show? And because if you've been watching for a couple hours, you've seen like 5 or 6 different people rotate in. And that's just, to me, is the coolest thing. If someday my dream is to like chill out, after I get done with my stream, like maybe when I'm like, maybe retirement for me is like I stream in the morning and then I just watch everybody else go after me. I think that'd be so cool. Alan says he's been watching since birth. That's actually remarkable, Alan. I'm really impressed that you were born and immediately started watching the A1 Trading Show stream. That's incredible. That's awesome. 5 hours. Okay, some of you guys have been here since the beginning of the show. Shout out to you guys. That's awesome. Okay, guys. NVIDIA earnings coming out pretty soon. Let's just roll a breaking news, Chandler, for the good old times. Let's do a breaking news. Okay, NVIDIA earnings. The countdown starts now. I think after the stream ends, guys, I'm just going to probably fall over in this chair, and then I'll just wake up tomorrow in time for the next stream. Okay, NVIDIA earnings. Let's see if we get some market reaction here. Again, NVIDIA earnings might be right away. They might be a few minutes. So we just kind of buckle in and wait to see what we've got. I gambled and bought one share. Still, one share is whew. Even one share is $950. So again, big thank you to you guys who have hung out with us all day. We really appreciate it. We really have like one of the most wholesome and awesome communities. You wouldn't expect it from like a money-centric, topic. But I think traders, like real traders who I think we tend to attract on this show, if you're a regular, like it's a good chance you're over all the nonsense and hype of like Lambos and lifestyle stuff. And so we've got a good community. I appreciate you guys hanging out today. Okay, so EPS 5.58 reported. Again, if you guys find anything on NVIDIA earnings, that was my mistake. Okay, yeah, Alan, I was about to say there's not much of a reaction yet. When is it happening? That is the question. It could be any minute. Earnings are not, for people who are newer to the stock world, they're not as like snappy as the Bureau of Labor Statistics data drops on a dime, Again, NVIDIA slightly higher here in the post market. Just waiting to see what the numbers are. I'm searching on Twitter. The thing is, once the numbers come out, you can usually tell instantly because, yeah. We will keep tabs on it. We'll keep an eye on it. Guys, we've reached the end of the workday here at A1 Trading. So James and Chandler, you guys are free to leave. It's like when you get let out for recess. You guys don't have to stick around. I'll just shut down the stream. Round of applause. Hold on. Is my audio on? Hold on. Let me do it. Round of applause. James and Chandler today, guys. W's in the chat if you guys don't mind. W's in the chat if you enjoyed today's stream and you want to just thank the producers behind the scenes. We got two great guys doing a great job keeping the show alive. This was no easy feat to keep it on this long. That's a good one. We got our soundboard is going crazy these days. What else do we have? So check this out. Let me try one, James. Check this out. I like this combo.
You what? You what?
I feel like that's funny.
Woo! Yeah, baby. That's what I've been waiting for. That's what it's all about.
Yeah, that's good stuff. Good stuff. Is that John Cena? Absolutely, it's John Cena. Are you kidding me? Mm-hmm. It's like, do you know the like Bumblebee in Transformers? You know how he communicates through the radio? That's what James and Chandler, that's what their eventual that's their destiny. It's just to become Bumblebee from Transformers.
It's funny. All right, nothing yet in terms of movement. S&P and NASDAQ are, trailing higher into the print, but just yet. Oh, James is making an appearance from the A1 office main room. Let's see. Here he comes. You guys ready? Oh, James. What's up, James?
I was coming in to keep you company because this is taking a while, and I'm just playing around. This is what we use for our little soundboard. Here's Chandler.
There's Chandler.
Chandler's been behind the scenes all day. Chandler's the real unsung hero of the A1 live streams because he's Nick may take a break from the stream for a little bit. I might pop in here and there to help, help out, give Nick a break. But Chandler is here 24/7. Chandler doesn't leave. So this button, where is it? This button right here is for Chandler.
What else? I gotta see what else I've got. Because we added some new ones, James.
We did. I should have. I did not go in and.
Oh yeah, I didn't set that up yet either. We had the Fortnite sound. That's pretty good one.
You can play. You could play them on Discord. Give the people a little sneak.
Oh yeah. Let me do that.
I went through yesterday, I think, and grabbed a bunch.
So we got the John Cena ones. You guys have heard those.
Also, I was Googling to try and find an exact answer on NVIDIA earnings, and I could not find an exact answer for when they come out. It just says aftermarket, so I don't know what time exactly. It
usually is like right near the end of the market day, so like 4 to 4:10 is usually where you'll see.
I'm seeing a lot of 4:10.
Yeah. 4:10. We'll give it to like 4:15, and then if there's nothing, then I'll just sleep here tonight.
I see upcoming event Q1 earnings call 5 p.m. Eastern. That's on Google. If you Google NVIDIA earnings, that's the top. It's like a special Google Calendar alert. Like you can join in the earnings call.
Yeah, I think the earnings call is at 5. We won't make it quite that far, but that will probably also be significantly market moving as well. But I got to get home and eat dinner. I'm sure you guys are the same way. Let's see. Somebody asked a good question here while we wait. Have you ever made a trading mistake where you over-risked on a single trade? Yeah, baby. That's the answer. It's been a while since I've made like just a stupid emotional mistake, but I certainly have made that. I would say I haven't made just what are you doing mistake in a number of years, because that's the sort of stuff that just gets you in a lot of trouble. But it certainly has happened in the past. It's easy to do, especially like on a losing streak. You just get like frustrated or fed up with like progress not being made, and it is very easy to make that kind of mistake, and a YOLO trade, if you want to call it that. But no, it's been a minute. I have a pretty set way of doing things, and I think that's been very helpful to me. I've been tested to the limits in 2022 when the market was just down 35% for the NASDAQ and stuff like that. So, there's been tests, but I've been pretty consistent to the trading plan for a number of years. I think there was a moment where I'm like, if I'm not sticking to the plan, like I'm not going to do this anymore. Like there's no point in trading if you're breaking your rules and just like blowing stuff up. Like if you're inevitably just making a silly mistake. So you call it discipline, but you could also just call it like, I don't want to waste my time anymore. There's so easy to make a big trading mistake and just, reset your entire progress. So I don't trade on margin. I don't do anything like that. I try and keep it as conservative as I can. My account size has gone up over the years, and so the numbers have fluctuated more. The good times are good, the bad times are bad. But in terms of like a percentage basis, I try and keep my percentage swings as minimum as possible. So yeah, still nothing on NVIDIA yet.
Nothing yet.
410.
I've got a question for you, just because I'm curious, and I think I know the answer. I have an answer in mind. It might just be an early one, but do you remember what the very first thing that you traded was?
I think the first thing I ever traded was a stock. I think it was Ford stock, Snapchat.
I had Snapchat in my head. I know that you've talked about Snapchat early on because that went poorly, right?
It did. Yes. Snapchat like popped open on the IPO and then just fell consistently after that. So it was a tough one there. I think I had traded some things before Snapchat, but Snapchat was like the first one where I was like, okay, we got an IPO on our hands. Like, this is exciting. And I learned my lesson. And that's pretty bad because 2017 was a year where the market just went straight up. So I still managed to mess it up in a easy bull market. But yeah, just crazy stuff. So still nothing on Nvidia, huh?
I am refreshing now. I'm looking. So far, not seeing anything. Let me see. Earnings calendar, Nvidia. Nope, don't think so yet.
Well, we'll keep waiting and seeing, I suppose. Again, James, Chandler, thank you guys for everything today. You are totally free to go. I don't want to keep you any longer. I'm just going to stick around, watch for the spike, and then myself, I'm headed out. So by all means, thanks for everything. And again, guys, W's in the chat for James and Chandler. And you guys, you guys go home. Chandler and James. That's a good clip right there. That's awesome.
Well, all right. Chat, do you guys want to say goodbye to Drew too? Drew, wave.
There's Drew in the background. Drew back there.
Drew.
Yeah.
Wave.
That's awesome. Drew from A1 Trading, everybody. We got Drew, Chandler, James. It's back office. All right, guys. We'll see you later. I'll close out the stream and we'll see you tomorrow.
All right. See ya.
All right. See ya. All right, guys. So again, we're just waiting to see what happens here with Nvidia's earnings. Still nothing on the Western Front. Just waiting to see. 420 on financial juice. Nick Yacht, indeed. While we wait, guys, if you haven't joined our Edge Finder giveaway, enter your name. Why not? It is free to join. Get a free copy of the Edge Finder if you win. Why not? If you want to join that, I'll get the link for you. Hold on. Let's go through the Edge Finder one more time. I mean, we might as well. I've gone through the Edge Finder 7,000 times today. But you know what they say, the 7,001th time, that's where it really clicks. Hold on, I'm getting the link. 1 second.
You what?
Where is this link? I'm like searching for.
I'm useless, guys. I'm useless without my producers here. Okay, here it is. It only took me 45 minutes, but there is the link to join the Edgefinder giveaway. If you have not joined already, if you're watching on Twitter, the link will be pinned below the live stream. We're waiting to see NVIDIA earnings and what they're going to do to the market. The market itself will move probably pretty aggressively based on the numbers. If NVIDIA comes out hot, the stock market will probably go up. If NVIDIA misses in any capacity or even just doesn't impress very much, the market will probably pull back. Actual time of the release is 4:20. Okay, thank you. Thank you for that. So we're narrowing in. I was looking at something on the Edgefinder when I was off camera. I was looking at the seasonality of the S&P, and we are entering into seasonally a very good time of the year. Everybody always says the old adage is sell in May and go away. But when you actually look at the numbers, at least in the last 10 years, that's been a really bad strategy. In fact, if you sold in May and came back after, you actually missed some of the best months of the year on a seasonally based month-by-month performance. So again, seasonally, this is actually a really good time to be long markets. And if you had sold in May, you missed out on what's been a really impressive rally for stocks. So we're getting close here. Supposedly, we are getting the numbers in 3 minutes. And for those of you who are also watching the numbers on your own terminals or news or Twitters, if you find the number, do us all a favor here on the show and drop those numbers into the chat for us to discuss and react to. NVIDIA trading just shy of $952 here with minutes to go, supposedly. We'll see it. We'll believe it when we see it kind of thing. We've been waiting for the earnings. I should have just checked when exactly the numbers are going to come out. But yeah, we got 1,000 people here watching. If you're enjoying the show, make sure to hit the thumbs up button. Help us out. We love doing these long ones. They're always fun. Long shows are just, they're always a good time. Guys, check out the new sound that we just added.
You what?
Soundboards just make everything better. They really do. Okay, so again, coming in close here, a minute and a half to go. S&P down slightly on the day. NASDAQ just about flat. Dow Jones down 0.5%. And the Russell down 0.85%. Just about 1 minute to go. Supposedly, guys, we'll see what NVIDIA brings us, good or bad. It all comes down to this. This is probably, in my opinion, probably the most important piece of information from the markets that we get this week. If you're watching the indices, it's like the mystery box from Call of Duty. You know, when you're playing zombies and you're like, what are you going to get? That's kind of what we're about to see. Rest in peace to anybody who's completely gambling on this. I wish you well, I suppose. I don't know what NVIDIA earnings are going to hold, but I know that it is going to be important to the markets from a thematic thing. Is AI, you know, just heating up, or have we short-term peaked? That's the question. So about 20 seconds away, and we will see what we've got from NVIDIA. What is you guys' favorite thing to get from the mystery box? I liked the ray gun. I thought that was cool. Call of Duty Zombies. All right. Let's see. Supposedly, NVIDIA earnings supposed to be coming out. Oh, NVIDIA is down here now. We just had a drop down to 925. S&P 500 just dropped down under. Look at the NASDAQ just said goodbye. 930 on NVIDIA. Oh my goodness, guys. And reversing. Now we're back higher. NVIDIA earnings 101. Look at that. We are now moving higher. Initially moved lower. Now S&P up well into the 5,300s. NVIDIA 977, 978. Look at that. 980 just about getting hit there. We're above 980 now. 985. NASDAQ up now up nearly 0.5%. S&P 500 flat on the day. XOK probably well into the 215s. Yep, there we go. So my position probably going to get closed out for me tomorrow. S&P, NASDAQ. Look at that. NVIDIA. Is it going to go touch 1,000? Trading at 990. Earnings were 6.12. Wow. Is that right? So estimates were significantly beaten. NVIDIA is trading 4% higher in the post-market, aftermarket. 1 second, I got to answer this margin call. That's comment of the day right there. So again, NASDAQ jumping here in the post aftermath. S&P 500 also 53 in the 53s. Gold still down on the day. Let's take a look at the dollar. Dollar not really moving on this. Again, NVIDIA trading just shy of 990 here. Is that going to be where it caps out? Now, let me also mention, guys, that there is an earnings call that will take place in about 40 minutes from now, where I believe you'll hear from Jensen, the NVIDIA CEO and the leader of the AI world as it is. NVIDIA trading 989. S&P and NASDAQ both up afterwards. I mean, the S&P basically closed flat today. With the help of NVIDIA earnings, we are flat. 10-for-1 stock split on NVIDIA too. Is that true? Are they doing a 6.12 versus 5.59 in revenue is significant. That is a good beat. But just goes to show our conversation earlier, expectations were so high for NVIDIA that even though they substantially beat revenue expectations, the market's up only 4.65%. NVIDIA is up that. The stock market is flat on the day. It was red, so it came back, and the NASDAQ is slightly higher. Does this impact Forex? Kind of. It kind of does. NVIDIA being strong shows the U.S. economy might be a little stronger than expected. Demand for chips, AI, push, stimulative to the overall economy. You could make a case for it's dollar bullish. Now, it might not immediately move the dollar index. You can see dollar index, not really moving in the last hour, but just from a thematic thing, I think that having strong demand for chips is, in my opinion, more dollar bullish than it is not. W to the guy that bought 1 share of NVIDIA. Yeah, if you bought 1 share of NVIDIA before this, you're up like $50 or like $40. Congrats. And if you don't mind, if you send me half of that $50 gain, then I will, I don't know. I'll put it in NVIDIA and it'll go up. NVIDIA's been on such a tear in the last few years. It just seems like nothing can get that stock to go down. Certainly not good earnings, though. Earnings today were a big hit for NVIDIA. Raking in the cash, if you will. And if Frank was here, he would say that's a perfect candle.
Perfect candle. Oh, that green candle right there.
All right, guys, I think that's going to be it. I've been streaming for 5.5 hours. Now, I'd say that lightly because I've had other people rotate in and host the show, and James was hosting for a little bit, and then we had several guests, Chris Pulver, James, Kinzo, Marco. It's been a heck of a stream today. What a fun day it was. Thank you guys for hanging out. That's going to wrap it up. I'm going to let the earnings call, if you want to tune into the earnings call, I'm not going to stream it. We've gone too long today. I gotta give it a break. I want to thank everybody for hanging out with me. Again, shout out to you guys. Thank you for hanging out. If you're new, subscribe, follow wherever you are. We do this on a regular basis. We try and bring value to the community the best we can. Last thing I will say is that if you have not already joined our giveaway for the Edge Finder, we're giving away a copy on Friday. Click this link right there to enter your name in for a chance to win a copy of our market trading software, the Edge Finder. Okay, that's it, guys. Thank you very much for tuning in. I don't even know how to play the outro to the stream anymore. Give me a second. Okay. And I got to find the outro here. Pirate outro. You guys want to do the pirate outro? That's all. See you guys.
Thanks again for watching today's show. Our goal one trade to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.